So by show of yeses or nos, how many of you guys have learned about portfolio management? Kind of where are we at in terms of that? Is there some people that haven't heard of this yet? Some people that have? Okay, we get one no, which excites me. So that's awesome. So one no is enough for me. Multiple no's is good news for me because I really, really enjoy this segment. This is my favorite teaching segment that I have personally taught. I think this right here is the only segment that you really need. And I really enjoy this. So with that said, guys, I'm going to ask you guys to kind of be interactive with me. I have a few questions to ask you guys. So the first question's already here. How many times have you guys found yourself doing well trading, potentially profiting week to week, and all of a sudden a few trades wipe your account and you lose a substantial amount of money on that trade? Has anybody ever gone through that yet? Well, what we're going to do today, basically, in a nutshell, is discuss how, different ways and different strategies to avoid this from happening. No matter if you're trading the Delorean strategy or otherwise, this is going to be a one-size-fits-all approach to that, and I call it portfolio management. So first of all, you need to understand that this happens to a lot of traders. This has happened to basically everybody at one point in their life. In fact, I've told this story a couple times. The first day I started trading with real money was with Tyrone, and I was with my family. I was in college. I was a freshman in college, I believe, freshman or sophomore. Freshman in college. I remember where I was sitting. I was on my iPad. I was sitting on the couch, sitting next to my dad. I put $300 in. I turned that $300 to $800 within 20 minutes, and I thought, oh my gosh, Dad, look at me now. I'm not going to have to go to college. And he laughs. The next morning I get up and I trade it again. I have $800 in my account, and that $800 becomes zero and quicker than I could blink. That right there, is a nutshell, is how I learned that you need to do something else other than just entering and executing trades to actually make money. So with that said, today I'm here to show you, first of all, in this, that there is no magic strategy. There's no one size fits all. Yes, everybody trades with the Delorean, but everybody's going to be trading at different times, a little bit differently, different time frames. Everybody at the end of the day is an individual. And if you buckle down on today's concepts, you will become profitable. So the first thing I want to discuss is, this is two different accounts. I'm gonna draw on this. So I'm gonna put a red line down here. So left side of that red line, we'll say this is account number 1. This is account number 2. Okay. Now you can put any amount you want, but I just did this for intensive purposes. Let's say you invested $20,000. So if you invested $20,000, and you can do this with any amount, this is just a spreadsheet taking 2% per. On the left side, this is risking 2% per trade. On the right side, this is risking 10% per trade. And today we're going to learn all about how to measure that, how you calculate that, all that good stuff. So in terms of the left side, I want to show you that we lose 10 trades in a row. We started at $20,000. At the end of 10 trades, we have $16,675. On the right side, we're risking 10% per trade. We start with $20,000. And after 10 losses in a row, we are left with $7,748. So this is literally just an example to show you what risking higher amounts can do. They're detrimental. And whether this is $200, $2,000, $20,000, $200,000, $2 million, the same goes. If you're risking higher percentages, you're going to be having a more difficult time. Now, is 2% the magic number? No. So I want to get realistic with you right now. How many of you guys, by show of hands, have heard of the term, how do you know the meeting ID? Sorry about that. It's DeLoreanMastery.com. Let me...
Hey, Patrick, it sounds like there's some people that aren't able to get on by going to the website directly. It's asking them for the meeting ID for some reason.
Okay. Here, hang on one second.
Thanks.
Let's see here. Invite, copy URL. All right, I'm going to copy it in the chat. Let me know if you can copy it. Did that just pop up?
Yeah, I got it. Thank you so much.
Perfect. All right, guys, I'm going to mute everybody now. Yes. Okay. So where I was just at was I was asking you guys a question. How many of you guys have heard of a 401k, IRA, one of those sort of terms before? Anybody heard that? All right. My accountant, for instance, just called me yesterday. He said, hey, you need to put $20,000 in your IRA next week. So this is a good example of that. Do you think 24-year-old Patrick is going to have a more aggressive IRA next week or a more conservative IRA than a person that's, say, my dad's age, 54 years old? Who do you think is going to have a more aggressive portfolio? Yeah, probably me. I've got time on my side. So the first thing I want to let you guys know is that you're risking 2% might have some things to do with your account size, your experience. It might have something to do with how old you are. And the reason being is that some of you guys need to be more aggressive with your money than somebody that's getting ready to go into retirement, that's getting ready to pull their money out of their account for the rest of their life. Okay, so first of all, you need to understand that if you're in a spot to be aggressive, you can be aggressive. Now, I'm not saying be 10%. That was me showing this is a bad idea. I recommend between 1 and at the top 3% risk per trade in an account. Now, here's the caveat to that really quick, and write this down if you're taking notes. When you are risking per trade, let me raise this up. When you are risking per trade, you have to risk the same amount per every single trade. Is that clear? So if you pick 1%, you must risk 1% every single time until infinity. The reason being is I'll pick on Tyson for a minute. If Tyson's trading and he is taking 1% on this trade, and that trade wins, then the next trade, Tyson goes, oh my gosh, look at me. I'm Michael Jordan of trading. Watch this. He risks 3% the next trade, and he loses. He just risked 1% on the first trade, but 3% on the second trade. He's won one, lost one, but he's losing money because he increased his risk on the second trade. So it needs to be the same amount every single time. Never have a bias towards a position, meaning never say this trade is going to win. Never assume that this trade is going to be better than the next. Always just say, these are our reasons for entry. This is why we're entering. So the next thing we need to learn is how to calculate that. So I can't copy the link actually. So I'm going to do this live as well. But the first thing is you need to remember this right here. You can take a picture of this screen if you want, or for those of you guys not wanting to take a picture, if I'm able to, I'm going to send you guys a link as well. But you're going to use that link, MyFXBook, and it's a position size calculator. So I'm going to, and Teresa already has it, so she's faster than me. So I'm going to, first of all, explain it, and then we're going to go through it. So I have a step-by-step, and the way I like to teach is through PowerPoints because I think it's easier to take notes. So I do this in a step-by-step, and then I'll give you a real-time example. So the first thing you want to do is enter your account currency, which means right here, are you trading with US dollars? Are you trading with pounds? Are you, what are you trading with? That little arrow is going to be clickable. It's going to drop down your currencies, so on and so forth. You're going to pick what you're using in your account. The next thing you're going to do is you're going to enter your account size. Now, the important thing here, if you're taking notes, is you're taking that number from your balance, not your equity. So when you guys have a trade account, it's going to show a balance and an equity. You're going to risk based off of your balance. And the reason being is, what if you have a $1,000 account and you have a trade that is up 10% on your account? You now have $1,100 in that account. Your balance will show as 1,000. Your equity will show as 1,100. You want to be risking based off your balance, not your equity. Otherwise, now you're risking based off of borrowed money because that's not guaranteed money to win unless you're actually going to exit right now. So always, always, always measure based off balance. This is where people get questions right here. Enter risk percentage. That goes right here. So that 1 to 3% number goes in this box right here. That's where you're entering. So based on you, I don't know, somebody let me know in the chat. What are you going to be risking every time? What's the amount? 2%. Again, I said 1 to 3. If you're a riskier guy, I have no problem you saying 3. If you're a person that says, you know what, I'm just trying to do this to see if I can do it, I'm going to be the least risky as, what am I trying to say? I'm going to be given the least risk as possible. I'm going to risk 1%. That's cool too. So that's where we're going to put that number. Just make sure you do the same every single time. You're still using account balance, yes. You're trying to use account balance. And the reason being is you could play with the drawdown game and then just play off of equity. But I'm trying to just be the best middleman of both worlds, meaning when you're up, your equity is higher. You could be risking more technically. When you're down, your equity is lower. You could be risking less technically. I'm taking the best of the both worlds. On average, if you just trade with your balance, you're going to be okay. Now, obviously, Teresa, to your question, that is if you are risking the percent that we talk about. Now, I'm going to pick on Dave for a second. If Dave decides that he wants to just go for it today and he risks 50% and he's down 20% on his account, do you think it's a smart idea for Dave to balance it off of his balance, to take the risk off his balance when his account's already down 20%? Probably not. But if you're trading with the same rules and you're down 1% on the equity, still trade with the balance because you're going to be up 1% on your equity from time to time. So always just look at that balance instead of the equity. Okay, and then from there, this is important. People don't think it's important, but enter the pair. Just going to click that drawdown. I'll do it live in a minute. Then you're going to hit calculate, and this is what's going to be, hey, you're risking 2%. 2% of $15,000 is 300 here. All that sort of stuff, 50 pip stop loss. Okay, it's going to say how large of a lot size you can enter. So this is this is the number you enter with. So if you have ever heard this, and I mean this by no jabs, disrespect to anybody in the industry, if you ever heard this statement, I promise you it's wrong. Hey guys, enter 0.01 per $1,000. Enter 0.01 per $100 or whatever if you've heard that before. There is no one size fits all from a position size unless he has already calculated it for you. If you've seen that individual calculate it for you, he's going to be able to say, hey, you can enter 0.86 per 15,000 in your account, obviously out of this example. But if he's not ever calculating it and he sometimes has a 50 pip stop, sometimes has a 20 pip stop, sometimes has a 100 pip stop, there's not a one size fits all approach. So going over to that link, this is what it looks like. Same as I just showed you. This is just not the screenshot anymore. This is really what it looks like. So pick your currency. Okay, most of you guys are probably CAD in here. I don't know if there's any US people in here, but if you're US dollar, some of you guys might be euro, some of you guys might be pounds, some of you guys might be yen, so on and so forth. Select your currency. Let's say, for instance, we have a $1,000 account. Now we are going to be, who are we going to be today? Darren, pick on you, Darren. You said 3%. We'll put 3%. Again, this can be anywhere from 1 to 3. Say the stop loss is 45 pips. We'll just pretend it's on euro dollar. Hit calculate. That's what our lot size is, 0.06. Now, my example is saying make sure you put in the currency pair. People always forget this because it doesn't seem important. Watch this. Watch this. 0.06. Let's change the pair to Swiss yen. Gets higher. Why? Because that's all to do with the ask price. It's all to do with the ask price. Can you get more of it for less? And so we could switch Aussie New Zealand. Look at Aussie New Zealand. 0.11. Almost double the amount in comparison to euro dollar. So make sure when you enter a position, you enter these pairs. And by the way, they do have commodities, all those sort of things. That's going to be, of course, this is for Forex related. We're not talking about stocks or anything like that. Okay. So why am I talking about this? Why is this important? Well, not to disregard anybody's trading ability, but last time I checked, I'm not and you're not 90% accurate, 80% accurate, 70% accurate. Most people are not. And if they are, they still might be having trouble profiting. And that has a lot to do with this segment. So here I want to show you that it's not all apples to apples. How many of you guys, by show of hands or show of ones, have been, well, everybody's affected right now. Who is affected right now by what's going on? You know what I'm talking about. Everybody. I am about to go insane. I can't get on a plane right now and go out of the country somewhere. It's insane not being able to travel. For you guys, you might be out of work. You might be out of working from home. You might be watching what I'm about to allude to, the stock market. How many of you guys saw this? What just happened? Now, the reason why this is important, anybody watch the Dow at all? Anybody pay any attention to that? Anybody watch that 30% decline? The reason I say that this is important to know right now is a 30% decline needs a 42.86% recovery in order to get back to those levels. Does anybody know why that is from a mathematical standpoint? Yeah, compounding is a good way to put it, in a way. So let's pretend we do this with a $1,000 Forex account. Okay? So I'm not going to pick on anybody and say they lost 30%. So Patrick, I'm picking on you. I'm picking on myself. Let's say Patrick has a $1,000 account, and man, he is just not listening to this segment, and he decides to risk 10% per trade on 3 consecutive trades because he's going to win and he's going to make all this money. He loses 3 trades in a row. He loses 30% of his account balance. What is his account balance now? Okay, we're at 700. So you might think, oh, he just has to gain 30% back to get back to the highs. What is 30% of 700, guys? Sorry, you didn't know it'd be a math morning, did you? 210. So we go up 210. What are we up now? 910. We're still down. You see that? You're still down 9%. Why is that? Well, it's all to do with just the number itself. That's why this loss in your Forex account, in the Dow, in the market is detrimental. It's going to take longer to recover that because you have to recover more. When people say I lost half my account, they got a long road to travel. When people say they lost 7% of the account, they got a really long road to travel. When people say I lost 90% of my account, face it, you got to hike Mount Everest. So that is important because this is then when people do what? They increase their risk percentage. They increase their risk. They increase their risk. That 1 to 500, that 1 to 1,000 brokerage account looks a heck of a lot better now, doesn't it? Let's just see what we can do. So that's why this is so important, not only to your Forex account, but right now as we speak. Because this crash that we have been going through, both from multiple facets, but let's say from an economical standpoint, every single country is correcting. This crash we are going through, understand that when a country corrects 30% gain is not all they need. They need a 43% gain to recover back to those highs. You want to exceed those highs? Now you've got to go even further. Okay, so with that said, let's get into the next segment. Managing your portfolio is not just about lot size. Hey, Teresa, not to stop. Can you send unless you've already done this, can you send Tyrone the link? Oh, you've already done this. Okay. Man, that man is blowing up my phone. All right. So with that said, it's not just about the lot size, and that's where people kind of stop. So you need to have 3 standards. So write this down. You need to have the risk percentage. How many by show of ones feels pretty comfortable now in the risk percentage and understanding that? What I should have done as a good teacher is I should have stopped and asked if anybody had any questions. But if you have any questions about that, now is your time. Step number 2 is what we're going to talk about now, which is your risk to reward ratio. 1 to 2 minimum. Okay. There's Tyrone. You can see he's on his way. He's driving as we speak. He's coming. So with that said, risk to reward ratio, that's step number 2. What does that mean? Now, Teresa, I'm going to unmute you. We're going to play a little game. All right, Teresa. So we're going to play rock, paper, scissors, okay?
Okay.
So in a minute here, we're going to do it. Now, Teresa, if I win, I get $10. If you win, you get $5. Is that fair?
No.
No? So why are we doing that with our trading? So that's an example of risk to reward. Teresa, in that example, is risking risking $10 to make $5. I'm risking $5 to make $10. In that example, I have a 1 to 2 risk to reward. So a risk to reward ratio is risking half what your reward would be. So now, Teresa, if you win, you get $10. Do you have a Venmo, by the way?
No.
Do you have a Cash App?
Skrill.
Okay, you have a Skrill. I don't have a Skrill. Anyway, never mind. We're not going to do it. I was going to actually do it, and I was going to say, you give me $1, I'll give you 10. But that's an example of a ridiculous risk reward for Teresa. She gets 10 if she wins. I get 1 if I win. Do you think she's going to play rock, paper, scissors with me like all day long? Yeah, she's got 50-50 chance and a 10-1 odds. What you guys want to do is take that example and remember rock, paper, scissors and think about how can I play rock, paper, scissors in that way on the charts. So thank you, Teresa, for that. So now with a risk to reward, all this means is that we are risking 1 for a reward of minimum 2. 1 pip, reward of 2 pips. Okay, so let's say your stop loss, Dave, is 30 pips. What's your reward minimum need to be? Multiply by 2, minimum, 60. If it's 90, is that okay, guys? If it's 110, is that okay? Yeah, the higher the better. Remember, the one thing that gets people to listen to Patrick, this one statement, I will teach you how to lose more than you win and still make money. People light up when they hear that. Why? Because they have been winning more than they lose and they're still losing money. And that's all to do with your risk to reward ratio and your risk percentage. So your goal is a 1 to 2 minimum, but that doesn't mean that it's a 1 to 2 maximum. You can be a 1 to 3, 1 to 4, 1 to 5. Measure your pips because you have to do it to measure your risk to reward ratio or you measure your risk percentage anyway. And now when you're looking at your rewards, see, is it double? Is it triple? Is it quadruple? So that's the second part. Is that clear with everybody? First part, check. Second part, check. Now we get to the third part, portfolio mix. This is the part that people really don't know about. Portfolio mix. That's why I call this section portfolio management. Now we need some, what's it called? Some interaction from you guys. If you sell euro dollar, is it wise to sell and short Aussie dollar, New Zealand dollar, or other dollar pairs in the same direction with the same type of setup? Would it be wise to do that? Yes or no? And that is if you're going to be risking 2% on euro dollar, 2% on Aussie dollar, 2% on New Zealand dollar, so on and so forth. The answer is no. Okay, what you're doing in this case is called doubling down. Now, the reason it's called doubling down is if euro dollar is shorting, Aussie dollar is shorting, what does that generally mean for the dollar? Stronger or weaker? Euro dollar's going down, Aussie dollar's going down. Good job, Jason. I was waiting for somebody to save me. Strong. Euro, USD. Second 3 letters are the USD. You know, the second 3 letters control the downside of the market. So when the market is going to the downside, it means the second 3 letters are stronger than the first 3 letters. So if euro dollar is going down and Aussie dollar is going down, what are the odds that New Zealand dollar is going to go down? Well, it's because the dollar is gaining strength. The odds are going to be higher. It doesn't statistically have to happen, but the odds are going to be higher. So what we want to do is make sure that we don't trade euro dollar short, Aussie dollar short, New Zealand dollar short, dollar CAD long at the same time on the same type of trade. So we need to find our mix. So what I do personally and I do this every day in my live session. You guys have gotten in a habit of seeing this on the right side of my screen. I have 4 to 5 yen pairs, $4 to $5 pairs, 4 crosses, and I have gold and silver on the right side of my charts at all times. Because I trade 1 from each group max. I don't have to trade all 4 every day, but I trade 1 from each group max. And how I do it is I trade this way, 1 from each group per type of trade. So I'll break it up into, I have 3 on here, but I'll break it up into 4. We have an investment type trade, which for those of you guys that are building your stock portfolios with me right now inside of my live room, you know that we're an investment type trade. By the way, I have a great video coming for you guys publicly, top 5 stocks. You guys are going to love that. Second is swing trades, which are weeks. Third are scalp trades, which are days. And fourth, we could say spot trades, which might be hours. So what I mean by trade this way per type is we could be short Aussie dollar. Let's say we're short Aussie dollar for an investment type trade. So we're selling Aussie dollar for a year. But if there's an opportunity to buy Aussie dollar in a scalp situation, we can still do that. That's a completely separate type of trade. That's a completely separate situation. But what you don't want to do is trade Aussie dollar short, Euro dollar short, New Zealand dollar short. Those are like the same type of trades. That's the same as what I've talked about for those of you guys that have been live with me. With how many of you guys have been listening to me talk about oil a lot? It's the same situation. When I'm talking about buying oil companies, notice I don't say buy them all. Why? Because I'm trying to desensitize the information. I'm trying to say, okay, oil's taking a hit. We don't want to put all of our money in all these oil companies because what if we go to negative a barrel and then some of the companies actually go out of business and go bankrupt? Okay, we don't want to do that. So we only pick a few per type of trade. Same here. This is your portfolio mix. Now, to answer your question, cross. Crosses like, for instance, the 4 crosses that I trade are pound, Aussie. Oh, man, that was supposed to be an A. A-U-D. Pound Aussie. Pound New Zealand. These are just what I trade. Euro Aussie. And Euro Pound. Those are the 4 that I mainly focus on. So that's my cross group that I pay attention to. Okay. So next chart, a lot of information on it. But this is another segment of this, understanding when markets move, what they're doing. So let's just read this for a second. Euro dollar's going up. Dollar yen's going up. Short term. Do you think it's smart to short euro yen? Yes or no? If euro dollar is going up and dollar yen is going up, do you think it's smart to short euro yen? Yes or no? No. Now, this is a cheat sheet, so your answers were held right here. But let's break this down a little bit. Euro dollar is going up. So which currency is stronger? The euro. Dollar yen is going up. So which one is stronger? The dollar. Euro is stronger than the dollar. The dollar is stronger than the yen. Let me say that one more time. Euro is stronger than the dollar. Dollar is stronger than the yen. So the euro must be stronger than the yen. That is why the double arrow is there. Now, if we go over here to, say, Aussie dollar, New Zealand dollar, this is an example here now we just talked about. Just because the dollar is stronger on Aussie dollar, or I'm sorry, weaker on Aussie dollar, doesn't mean it's going to be weaker on New Zealand dollar. We talked about it a second ago, doubling down. I mentioned that. But in this case, this is a chart that's now going to culminate all of that. So an example where you look at Aussie dollar, it's just skyrocketing today. New Zealand dollar is just plummeting. You go to look at Aussie, New Zealand, you better not be looking to sell it. And obviously, all of these are going to have some sort of contingencies, typically from an economic event. You're not always going to see massive spikes in all these pairs every single day. Economic events have a lot to do with this. But this is what we need to follow. If you can follow this and look at this, you're going to start to be able to range your portfolio in a better way and make better decisions. Because I know for a fact, and I'm not picking on anybody, but I know for a fact somebody in here at some point in time has seen euro dollar going down and dollar yen going down and decided to buy euro yen for some reason. Somebody's done that at some point in time. That's not what we want to do. Okay? So our focus, again, is the mix. Is that clear? The portfolio mix. That's your third portion. So again, let's to recap. We have our risk percentage. We have our risk to reward ratio, which is just as important. And then we have our portfolio mix. There is no priority here. When I go back here real quick, this is not a 1, 2, 3 situation in order of importance. This is equally weighted. A 1, 1, 1. You must have all three. If you don't, I promise you're going to have more trouble than if you were to only have one of them. You must deal with all three, because if you can have a proper risk percentage, and just to reiterate one important point, pick the percentage between 1 to 3 and stick with it. Every single trade is going to be the same percentage. And in a moment here, I'm about to burst some bubbles as well. So just, Teresa, sorry about that. And in a second here, the reason I want to burst some bubbles on that percentage is that really what I want you guys to understand is this is all you need. If you can grasp these concepts, what you just did is you took pressure off of winning every single trade, which is good. Understand, the market is always right. Let me say that one more time. Tyrone Foster, you are not always right. I am not always right. Anybody inside of the IM platform is not always right. That guy you watch on CNBC is not always right. The market is always right. Anybody right now that tells you that they know where the stock market is going right now is full of themselves. We don't know. Anybody that tells you where a currency pair is going next week is full of themselves. Nobody absolutely knows. Did you know that we are literally fortune tellers? We get paid to tell the future. If we predict it correctly, we make money. If we predict it incorrectly, we don't make money and we lose money. So if you can trade on the right side of the market with the trend, in conjunction with what I just said, you're going to be profitable in 2020 and beyond. But with that said, here's where my burst is going to come. I'm going to burst some bubbles now. There's a pandemic going around right now. No, I'm not talking about the coronavirus. The pandemic is this. There are people out there that are introducing folks, unfortunately, to this market, and hopefully it's none of you guys, but they act like, hey guys, we can make a $100 investment and we can turn it to $14,000 in 4 days. If you've heard anything along those lines, I promise it's not actually happening. And the reason I say that is if you are following strategic principles that we just talked about, $100 is going to be really difficult for you guys to make work with what I just talked about for certain type of trades. So this is where I'm going to talk about your type and style. This number right now, this is where I don't like ask questions. I don't want you guys to comment what that number is in your balance. I don't care. It might be less than that. It might be more than that. But here's where I want you to listen up. If it's far more than that, you have more leeway as a type of trader you can become. It's the reality of it. And just because you put more in doesn't mean you're risking more by any means. And what I mean by that is when you put 2% and you put a 50 pip stop on euro dollar, 0.004 doesn't even exist on MetaTrader 4. 0.01 is the smallest increment. That is 1 micro that you can trade. There are people out there on this call right now that are trading with $100 in their account. And guess what? They are using a micro. So how much are they actually risking? Well, they're risking more like 5% in this case. Okay. So you might say, well, then it looks like I have to risk 5%, Patrick. No, that's not what I'm getting at. What I'm getting at is the smaller your account is, the smaller this number needs to be. The smaller your account is, it correlates directly with the time frame you're trading on. Meaning if you have a $100 account, you should be trading on max the 15-minute time frame. Because what is your stop loss level going to be? Those of you guys that are in Delorean, it is not uncommon to have a 10 pip stop, is it? So if you have a 10 pip stop now, risking 2%, look at that. You can actually do it. Now, where I say the higher accounts can do more, let's say you have a $10,000 account. Your stop loss is 100 pips. You can still trade it. Your stop loss is 200 pips. You can still trade it. Your stop loss is 500 pips. You can still trade it. What I'm trying to say is this number has a lot to do with it. And I'm about to go to a blank screen in a minute and keep going on this. But this number has a lot to do with the type of trader you are. So I'm going to give you a little bit more information as Tyron's getting home and he's about to go in on strategy today. And when he says, Patrick, I'm going in today, I'm in my desk. I'm as much of a student as you guys will be. But what I want to talk about really quick is what I have done with people when I sit down with them for the first time. So prior to the Delorean, prior to I Am Mastery Academy becoming an educator for the platform, I used to educate privately. And what I used to do was one-on-one sessions. So I would take one of you guys and we would sit on a meeting just like this. And the first thing I would do is not ask anything other than tell me about you. So I'm going to pick on somebody who wants to go that has a webcam on and tell me about yourself. I'm going to do it with you. I'm waiting. Anybody? If not, it's all right. I'll make it up. I see the smirks. It's like you're back in college class. Where's Scott at? Scott said I will. Scott, can you turn your webcam on so I can see you or wave? Oh, there you are. There you are. All right, I'm unmuting you, Scott. All right, everybody. Scott, can you hear me?
Yeah.
All right. Can everybody hear Scott? All right, perfect. So here's what I do, Scott, and this is what I would do with you and everybody else. So everybody just write down these questions and answer it and then watch my rationale. So Scott, the first question I'm going to ask you is tell me about, now not in the pandemic, but not right now. So think about it prior to this. I know we're all so thankful now for life, what it was. And then once it gets back there, we're going to be way more thankful, I think. What was your life like prior to the pandemic? What did you do on a day-to-day? And what I mean by that, on a Monday morning, when did you get up? Do you go to work? All those sort of things. So describe your day. I'm just going to start jotting notes down. Describe your day.
On Monday morning, I get up at probably 5 o'clock in the morning, get ready, go to work. I had to be at work at 7, so I'd usually have my coffee and breakfast and everything like that at work at 9. I don't eat before 9 typically. I carry on with my day at work and then get home.
Do you have a lunch break?
Yes, I have a lunch break for half an hour at noon.
Okay. What time do you get home?
I usually get home at somewhere between 5 and 5:30.
Okay, we'll say 5:30. What time zone are you?
I am right now Mountain Standard Time.
Okay. Okay, now this second question is not going to be answered, just so you know, by Scott, because the second question I would ask Scott in a private setting is now, how much are you working with on your account? That'd be the second question, and I'm not going to ask Scott to even answer that. So we're going to pretend Scott said $1,000, because I think $1,000 is a pretty standard answer for most people, give or take whatever the answer is for you. So Scott, I just answered that for you for your sake. Now, the question now for me, I like to get your day from 5:30 p.m. What time do you go to bed?
I go to bed now between, well, previous to this, it was about 11 o'clock.
Okay. So that's when you're sleeping. This is by no means trying to figure out his sleep schedule, by the way. So what I'm trying to do is I try to figure out when, and everybody do this with yourselves, when are you awake and available? What all Scott just said to me was he is a busy bee from 5 a.m. to 5:30 p.m. That's all he said to me. But what he did yell at me is that between 5 and 7, he's getting ready to go to work. How long is your commute? Your work is at 7. When do you leave your house?
I leave my house at about 6:30. My commute's short.
So short commute. Some of you guys just write down your numbers. The reason I'm doing this is I'm trying to figure out when is he available to be on the charts. Everybody would probably agree his time that he is most available on the charts is from 5:30 p.m. MST to 11 p.m. MST. Now, everything, the anomaly says I'm available on the charts anytime. Well, that's because you're an anomaly, man. Not many people are. That was clever. Sorry, that was a bad joke. All right. Anyway, 7:30 p.m. Eastern. Everything that I do is Eastern. So I think of all these numbers in Eastern. So you're to 1 a.m. Okay. So I know in reality of it, when you are scalping trade setups, first of all, the market won't even begin moving until later in that evening for you, Mountain Standard Time. A lot of you guys on Mountain Time, by the way? A lot of you guys are? Okay. If you're not, Mountain Time's, I mean, I'm on Pacific. I live in Arizona in the U.S. right now. For those of you guys that don't know, I don't have one. I'm a 24-year-old, what's it called? What do they call those? Snowbird. I go up north in the summer, so I'll go up soon. And it changes in Arizona though. So I'm Pacific right now. I'm Mountain in the other in the fall when we fall back in time. So it's weird. But I think of everything in terms of Eastern because then I think about London session. And so when I always think of trading, I really think of trading as prime time between 1 and 9 a.m. Eastern. That's my prime time. 1 and 9, prime time. And so what you want to think of right now is how many hours a day are you available in prime time based on your schedule? 1 to 9 a.m. Eastern. 1 to 9 a.m. Eastern. So I look at his schedule, Scott's schedule. By the way, thanks, Scott, for helping out there. And I look at his schedule and I say, okay, 11 p.m. is when he goes to bed. He's going to bed at the beginning of prime time. Let's be realistic here. Scott can't, I'm just being honest, Scott can't push 5:30 forward. Scott can't get up later. He has a job. So what I started to do with people is I start to work with people that are trying to take their trading to the next level. And I say, look, based on your schedule, you either don't have to change anything or look, you have to take it in order to take it to the next level, you're going to have to make some sacrifices and take some adjustments. In Scott's case, unfortunately, Scott has to make some sacrifices and make some adjustments. And what I mean by that is in order for Scott to really take advantage of the market and what it has to offer, what Scott needs to do is Scott needs to move his day back. Okay. Scott, my dad's going to love this schedule because my dad gets up at 3:30. So 4 a.m. is when Scott needs to get up now. So in order to get up by 4 a.m., what Scott's telling me is he goes to bed at 11 and gets up at 5. So that's 6 hours of sleep. I'm not trying to screw Scott's day over. I'm just saying, Scott, you need to get to bed by 10. If you can get to bed by 10, you can get up by 4. You enter the market at 6. If you can enter the market at 6, you're in prime London session. Liquidity is at its high, and it is reaching New York session. Liquidity is at its high. You get up at 4 a.m. Mountain Time. This is. Don't try not to get confused here. I'm switching between time zones. Hopefully you're following me. Okay, this is 6 a.m. Eastern that he is getting up. 4 a.m. his time. That way, between 4 and 5:30-ish, he is able to trade the markets actively. Him and his computer. So what you want to do is push that back. What I didn't do is get rid of his sleep, because sleep is more important. You guys are going to find this weird. I'm a 24-year-old, and guess what time I go to bed? 9. Absolutely, without a doubt. I went to bed at, I was watching that Crazy Tiger show last night. So I went to bed. It was late. It was a late night on a Friday night for Patrick. It was 10:15 last night, folks. 10:15. And I slept in a little bit this morning. I got up at, 7-ish or whatever. But when we talk about timing, in the weekdays, I go to bed at 9 because I'm not a night owl. I can't do it. I'm like an old grandpa. It's 9 p.m. It's time to go, man. Pop the melatonin gummies. I'm gone. It's over. I'm going to bed. For you guys now, some of you might say, hey, I am in love with late nights. I sleep in. So is anybody, give me a 1, anybody like that? Anybody a night owl? Does anybody that's like that want to do the same thing Scott just did? Anybody? It's all right if you don't want to. Let me see. That's all right. I'm not going to pick on anybody. So here's a different scenario. I'll take some of my friends, for example. They'll stay up till 3-ish. Yeah, you can. Where are you at? Do you have a webcam? Wave at me. There you are. I'm gonna unmute you.
Hey, what's up?
What's up, my brother? Long time no see.
That's true. How are you?
Good, man. All right, let's hear it, man. You know the drill now. That's all I'm gonna ask you. So, number 1, give me your day.
So I wake up around at 9 a.m.
What time zone?
GMT.
Oh God, you're gonna do this to me. Hang on. GMT.
It's plus 5 hours from Eastern.
Okay, thank you. That helps me. Your example is going to be, people are going to be envious of you. Let's put it that way.
I don't know. Let's see.
Anyway, keep going. 9 a.m. you wake up.
Yeah, so I get to work about 10 a.m.
Okay.
I'm there until like 1:30 p.m. Then I have a lunch break until 3 p.m. And then I'm off to work until like 7.
Okay. So you are 9, 8, 7, 6, 5, 4. So I'm going to break this down. So you're 4 a.m. Eastern. To give you guys reference in comparison to Scott, this is now 2 a.m. Man, we are just in a time zone training today. Okay, so the reason I said you guys are going to be envious is he is getting up at 4 a.m. Eastern, but it's 9 a.m. his time. So unfortunately, it's a really bad example in terms of a new example, because this is literally, Scott, do you recognize? This is Scott's schedule again. Get up at 4, so on and so forth. The trouble is he works all throughout these days. And so at 10 a.m., it's 5, he's going to work, it's 5 a.m. Eastern. London's just going to start to really move and then move over into New York, and he can't be involved. So what time do you go to bed as of right now?
Well, that varies, but I go to bed about around midnight.
And you get up at 9?
Yeah, I sleep a lot. No, midnight, between midnight and 2 a.m. It depends.
Okay. 2 a.m. It's 2 a.m. 2 a.m.
2 a.m. I'll
Because
watch
from midnight, I mean,
Tyrone.
you're going borderline hibernation on me.
I'll watch Tyrone's
I'm
session
just
at
kidding.
2 a.m.
Okay, so midnight or 2. And the reason I ask that is I think for you, it's going to be hard to trade in the daytime in work, but these are the hours that I would recommend you trade. But you can still catch volume in terms of it's 4 a.m. You can catch volume at 2 a.m. Eastern, 3 a.m. Eastern, 4 a.m. Eastern. So I would recommend the same as Scott in your case. Try to push yourself back an hour or 2. Now, you have to argue within your own self. Do you need 9 hours of sleep? Now, that's your argument to have with yourself. I'm not a sleep coach. Okay. Now, in terms of sleep, you don't want to then push it too far forward and start pushing. I think Scott's minimum 6 hours. Okay. Unless you're somebody that literally operates off of 4. Some people do. That's just the reality of it. But when we talk about your situation at hand, I would push yourself back 2 hours if you can. Get up at 7.
Right.
Give yourself 2 hours to trade here from 7 to 9 because these are prime hours in terms of Eastern. Because now you're 2 to 4 a.m. Eastern in this case. You're 2 to 4 a.m. Eastern. The volume is there. You have opportunities. That's when I would look to trade if I were you. Okay? Now, I'm going to mute you there. Just as one last example, if you guys are night owls in the U.S., sorry, that was a GMT example, but if you're in the U.S., we'll say MST again because a lot of you guys are mountain. So say you're MST. I used to do this myself. So when you wake up or you go to bed at 2 a.m., it's 4 a.m. Eastern. So for those of you guys that are now at night owls, your schedule could go as follows. Trade from midnight to 2 a.m. And that's going to give you an example and a good opportunity at volume because what you're dealing with is you're dealing with 2 to 4 a.m. Eastern time in this example for MST. For Easterners, 2 to 4 a.m. in that case. Okay, if you're on Mountain Standard Time, you can get away with this night owl strategy in terms of timing in the market. So you're going to be midnight to 2 because you're still up. You're going to go to bed at 2, and then of course you're going to sleep your 6 to 8 hours, and it'll be 8 to 10 a.m. Mountain, which is 10 to noon Eastern by the time you get up. The reason why I don't like this as much is those are your only 2 hours you're going to be trading in massive liquidity. By midnight or by midday Eastern, in this example here, getting up, liquidity is already starting to diminish because London is over and now we're only in New York. The reason being is every day, London, New York, they overlap. When do you think has the most volume? When they're overlapping and hitting. There's traders from London and New York, okay? So Pacific's time zone, just to give you guys an example, for me, I trade New York. I trade New York in my example. So when I trade, in my example, it's 5 a.m., get up, okay, which is 7 a.m. Eastern. I trade the New York from 7 to 9, okay? And then, of course, in this case, after about 10, I'm done. So 7 to 9 is Eastern time, which is 5 to 7 Pacific time. I go to bed at 10. I get up at 5. I trade from 5 to 7. After 7 a.m., I move and I shift my focus away from the foreign exchange short-term positions, and I only start looking long-term. Okay? So this is just an example. The reason I bring this up is you need to think about that as part of your strategy. If none of this is possible, the reason I bring this up is now if none of this is possible for you guys, moving your schedule like that, you have to trade long-term. You're going to be not locked into it, but you're going to be focused more on long-term trades. And the reason being is that there's going to be less liquidity for the type of moves that the person I'm about to introduce is about to go in for the next 2 hours and teach you guys on. Because the type of moves he teaches on is all based off of liquidity and volume. And the second portion of that was having funds and money in the account. If you guys don't have the funds in the account, you're going to be focused on more short-term trades. If you have a few $100, you're going to be focused on short-term trades. I'm trading Monday, Tuesday, Wednesday, and Thursday. Okay? So with that said, I would first and foremost like to say thank you. I hope there was at least one nugget in there for you guys in today's lesson. Again, I said earlier, please show your screen. Can you show us your screen before you started analysis times? I'm not sure what you mean by that. My screen's up, isn't it? Okay. So anyway, I'm going to stop sharing. And I don't know where you are, but you're in here somewhere. Everybody knows who I'm about to bring up, so I don't really need to introduce him too much. But on the slim chance you don't know who I'm about to talk about, this guy right here who I'm about to bring up is Tyrone Foster, first of all, the legend himself. He is the man that is responsible for teaching me how to trade. And with that said, he is also the person who is about to teach you exactly how to trade. He is about to go in, as he likes to say. So, Tyrone, let me see here. I'm about to try to find you. Tyrone, I'm going to make you host. I'm going to unmute you. Guys, I would simply sit back, relax, get a notebook out. You guys are about to be taken care of. Unmute. Make host.
What's going on? Patrick, oh my God, I think that was amazing, bro. Like, I'm over there driving and I'm listening to stuff and I'm like, oh my God, this is amazing. Guys, in the chats right now, if you appreciate Patrick and it was absolutely what you needed, I need you guys to blow up the chats right now. Say thanks, Patrick. I need everybody right now. There's a bunch of you on right now, guys. All right, perfect. Patrick, thank you so much. Everybody, if you're ready to turn it up, I need everybody in the chats right now to say turn up. Because we're about to go in on a whole nother level, guys. Today, I was trying to figure out what exactly, Patrick, should I go in on today? Because when I was talking to Risa and putting this whole thing together, we obviously want to get into trading and creating who we are as traders. I heard you speak about that a couple of times during your part and everything. So today is going to be all on you guys. But I want you guys to understand, we're going to be going over 3 major compartments, guys. All right? Look, somebody's about to get happy, Patrick. Here it goes. Watch this. Watch this. Here it goes. Y'all ready? Y'all ready? All right. I'm just going to make it go a little bit longer. Hold up. Y'all ready? All right. So, guys, one of the main things we're going to go over today is, all right, here it goes. Drum roll. That was a really poor drum. I'm sorry, guys. That was like water. All right. We're going to be going over stacking. Give it up for stacking right now, guys. All right, because we just went over portfolio management, understanding why you are trading 2%. But I'm going to show you guys how to stack as well, too, with that 2% as well, too. All right, so give it up. I mean, let me know in the chats. Is that something that you want to go over? I mean, maybe not. Maybe that's trash. Let me know in the chats right now. And make sure you guys are live in the chats, because the more you are live, the more I give. The next thing we're going to be going over, all right, here we go. Check this out. ADR and take profit, guys. Why? Because some of you guys are getting our trades and everything and doing great with them. But sometimes you want to just pocket your money. You need to know exactly when to pocket it, calculating those take profits as well too. And getting really, really good at it, guys. And then here's the third one. All right, here it goes. Y'all ready? We're going to be going over perfecting the art of the partial profit, guys. Yes, you already know Ebony. We're going to turn it up on the partial profit. Because how many people right now in the chats, since we've been putting a lot of emphasis on partial profits, have been doing absolutely amazing? In the chats, let me know right now. How many of you guys have been doing way better than you've ever been doing, all because you know when and where to take your partials? Even if a trade turns south, you still win. So we're going to be going over those 3 things. Now, in the chat before we get started, I want you guys to break down some wants that you guys need for the future. And I'm going to write them down before we get started. So in the chats, I'm going to give you guys about 2 minutes. Write down some stuff that you would want for myself, Patrick, Abel, to really elaborate on and help you guys reach these goals that you want. Because, guys, we always talk about you guys doing your homework. Well, guess what? Patrick and I and Abel, we like to do our homework as well, too. We are educators first. We want to make sure that you guys are winning and have the highest probability possible. And the only way we do that is by asking you guys. So Brandon said, let me actually go through all of them. All right, so Sean said stop loss. Oh, we can go over that today. All right. Brandon said TDI. See, what's crazy is I was going to go over TDI today, but I didn't think you guys would want to. Patrick Chat's about to go crazy. I'm like, are you serious? You know what? Just for you guys, this is your day. So I guess, you know what? We'll add TDI in the mix. Is that cool? I mean, let me know in the chat if that's cool. We'll add TDI in the mix. And this is just for you. All right, so what else we got, guys? You said you would like to, I'd like to learn more about the chart with all the pairs and the arrows. You're talking about Delorean. Great job. All right, perfect. Risk management. We just went over that. All right, let's see what else we got over here. Recovery for a bad day, bad week, bad month. And why am I asking this? Because this week we are going to be hammering out everything that you guys need. This week, next week, for the rest of this year, we're going to be hammering out what you guys need. How do y'all like that? Anomaly said nothing. Okay, great. All right. Let's see what else we got. How to bounce back. Perfect. Recovery. All right. What else we got? How to identify direction when we want a vector to go out of the A range. Perfect. Direction. Let's see. Trading journals. Small account building. Exits. Mindset of a trader. All right, guys, let's do about five more. Because this is what I'm going to be focusing on for this next week and the next week after that. Taking care of all this for you guys. Give me some ones in the chat if you like that. Currency strength chart. Totally spelled that wrong. Ooh, I like that anomaly. What not to trade. Ooh. I like that. Fringe. All right. Ooh, that's a good one too. Foundation. Well, what's amazing is a lot of the stuff we're going to talk about today. So I'm going to go ahead and screenshot this and get this ready for you guys for this week. How do y'all like that? Whoops. Where is this at? There we go. There we go. Oh, no, Kia, you have no idea what's about to happen. All right, so I got that. All right, we haven't got started yet. I'm just getting this out the way because I really wanted to talk to you guys because at the end of the day, it's about you guys. I can teach a million different things, but if you're not going to pick it up because you're actually needing a certain thing, we're going to go and hit that first. Justin said how to determine your stop loss. I mean, your take profit. We're doing that today. All right. So guys, the next thing I want to show you guys. Patrick, they ain't ready for this part. The next thing I want to show you guys is it's time to turn up, because guess what? We need Patrick, Abel, and myself all across this board right here. Why? We're going to be doing more live sessions, guys. In the chats right now, if you enjoy the live sessions so far, make some freaking noise right now. So before, I was only doing 2 hours a week for live trade session. These are real live trade sessions, get in, get out, all different type of stuff, all right? Well, guess what? I want you to look up here. Look at the name, guys. Not only are you going to get hours with us trading live, Patrick's already doing 4 hours a week already. Guess what? You're getting even more. Like Matt, come closer, bro. From now on, Tuesday, Wednesdays, and Thursdays at 6 a.m. Eastern Standard Time. But here's the best part, Ollie. Check this out. 6 to 8 a.m. Eastern Standard Time. So 2 hours each, straight live session. Then right after that, take a little quick break. Then you come right over to Patrick's class for a third freaking hour. Do y'all know what that means? That means guaranteed pips. Why? Because in 3 hours, we're going to find stuff. It's called guaranteed, exactly, in the kill zone. Guaranteed pips. Because the 1 hour was just not kicking it, guys. It wasn't kicking it. It's time to turn it up. Patrick's already been doing amazing. I was like, you know, it's time for me to do my job as well, too. So guess what? You're going to be on with me from 6 a.m. till 8 a.m. And I put some leeway, Patrick. The reason why I chose that time was because Patrick goes at 9. You guys know I love going over the time sometimes. And I don't want to ever go into Patrick's time. I appreciate it, Matt. I don't want to go into Patrick's time. So, Patrick, this is the reason why I chose this time, is because it gives some leeway where maybe we don't stop at 8 and go to 8:30. Maybe we want to watch something really quick. How do y'all like that, guys? No, seriously. How do y'all like that? I'm gonna give y'all guys something epic right here, all right? And this is only for you guys right now. If you guys go out there, push Delorean Nation harder than you've ever pushed in your freaking life, hit chairman, hit all different type of ranks. When that happens, or near when that happens, I'm going to fill this whole freaking week up with 2 hours to 3 hours straight trade session. I can do it. Yeah, I'll be tired. But is it worth it? Oh, it's worth it. Last week, we logged over to 700 pips after our stops and everything. Meaning 700. Obviously, you're not going to get all 700. But in the chats, if you got some of them pips, I want you to say, I got mine. I want you guys to say it loud right now. That's what I'm talking about. How many people in the world right now you think need this? So guess what? We're going to create not only the best product that we have, but you're going to be able to be with us live while we're using it, winning from it, beasting from it. And this is only the beginning, guys. Because not only are you going to get 3+ hours of trading each day, you also get Abel doing his London session as well, too. Good God. Thursdays must be Christmas. Seriously. Thursday's got to be Christmas, Patrick. It has to be. There is no way you can fail here. And I hope you guys are ready. If you're ready to get started, I need everybody to blow up the chat with some fire emojis, some unicorns, some waves. I'm sorry, some unicorns. because we're about to get started, guys. All right, so first things first, let's figure out what we want to start off with. So I'm going to give it a vote. I told you this is all powered by you guys. We can either start with stacking. We can either start with TDI. We can either start with TP and ADR, or we can start with, well, we're already getting the people coming in right now. That's what I'm talking about. That's what I'm talking about. Remember, I just added TDI to the mix. And guess what? There's no limit today. I know it says 2 hours, but you guys know I just go. You get all right, so we got 2 for stacking, 2 for TDI. Ali added TDI in the mix. That's 3 for TDI, 4 for TDI. Y'all must really love the TDI. All right. Well, I guess we're going into TDI first. All right, so let me move this out the way so we can go to TDI. All right. Hold on for 1 second, guys. Oh, this is about to be crazy. This is about to be crazy. There we go. Duplicate. Just so I can come back to this. All right, guys. How are you guys enjoying today's service so far? Oh, this is about to get fun. Name of C version history. Patrick, they want TDI, so I'm gonna give them TDI. That's TDI, guys. On like some real stuff, guys. TDI is one of my most favorite things to do because I really don't like to actually look at the candles. I actually use TDI for pretty much everything. All right, so let's talk about TDI real quick. So I got this up, and we'll come back to this in a minute. All right, guys, so TDI stands for Trader Dynamic Index. Let me get this whiteboard up real quick. Come on, there we go. All right, guys, so TDI is one of the most powerful instruments I've ever used in my life. Why? Because we use TDI for entry, use TDI for exit, and I want you to pay attention. I'm going to be speaking kind of slow so that you guys can really grasp every aspect of this whole call right now. I think it's recorded. Okay, good, it's recorded. All right, so guys, TDI stands for Traders Dynamic Index. It's the thing at the bottom of your charts that I usually have on mine, but I want to break down, and I want to do this from scratch for you guys before we even get into it. The first thing is this beautiful green line that you're going to see. All right, don't worry, we're going to go to the charts and everything. This is what we call the RSI. I want you to write this down in your notes. The RSI stands for Relative Strength Index. In the chats, I want you to write this right now in the chats. RSI does not lie or doesn't lie. RSI does not lie. There's a bunch of you on right now. I need to see this thing start flying. Yeah, I'm talking about you, little Timmy Johnson in the back. RSI doesn't lie. The RSI will show true direction. The RSI will show when to get into a correct entry. The RSI shows DeLoreans, shows the direction of DeLoreans. The RSI shows when to exit as well too. The RSI shows me when I take partial profits. The RSI, I treat it like God in the freaking market to help me out. And he sent his little baby Jesus, named the TDI. And RSI is just the best part of it. The RSI, I want you to really understand the power of the RSI. You can literally, some of you guys have watched this live. You can literally see a candle start going up. Hold up. Let me draw. You can literally see a candle close green. But on the RSI, the line went down. RSI shows where price really is, Alina. Price on the charts showed that it spiked up here. But on the RSI, this line was going down. This is showing where price really is. How many times have you guys seen on one of my lives, I'm like, stay in the trade? That's false. It'll shoot back up, put you negative a little bit. I'm like, that's false. How many times have y'all guys seen that? You can put some ones in the chat if you guys see me do that. I'll be like, stay in the trade. It's false. It's false. Because the RSI does not lie. All right, so let's move to the next one. Is this speed good for you guys to write notes and everything? Good? All right, perfect. Because I want you to really get this. This red line is the TSI, Traders Strength Index. RSI stands for Relative Strength Index. This is your TSI. On certain parts, I'll speed up and everything, but I want to get this is the meat. I want you to really understand this, Carla. TSI, RSI, you're going to see these for the rest of your trading career. This is the TSI. This is an EMA. The TSI, when crosses the RSI, shows true direction. TSI, aka blood. When you ever hear us say blood in the water, which we're going to go through all that real quick, because I got a surprise for you guys. I'm trying hard not to like really talk about it too early, but Patrick knows that I like to talk. So the TSI means what, guys, in the chats? Good job. Proud of you guys. It's the blood. What I love about the TSI. Oh, let me ask you first. What does the TSI do? It shows what? Yeah, shows true direction when combined with the RSI. So when they cross, it means that the next time frame up, time frame 15 minutes, the next time frame up is 1 hour that we base everything off of. The next time frame up is 4 hours that we base everything off of. The next time frame up is the daily. We only focus on these the most. This lets us know that the next time frame is in sync. If you see a cross on the TSI with the RSI on the 15 minute, it means the 1 hour is in sync. Joshua, they have no idea, bro. So guys, the next one we're going to talk about. What it basically means is if the 15 minute is crossing down, the 1 hour in that candle, even if they're going up, it's going to eventually start going down. It's in sync with that 1 hour now. The 1 hour is going to start, and the 1 hour takes longer, more pips. Then when the 1 hour crosses, that means the 4 hour. is in sync. And then when the 4 hour crosses, that's when the daily is in sync. The next one we're going to talk about, oh yeah, Tara, I'm about to go in. Yes, moving in the same direction. Because you could have two time frames moving in the opposite direction. And you're just waiting for that TSI to be involved. Once the TSI is involved, go look at the higher time frame. Oh, there goes the 1 hour pullback. It's coming. Oh, there goes the 4 hour pullback. It's coming. I just pretty much gave the biggest nugget right there, and nobody caught it. Don't worry, you'll get it by the end of this. How do you think I know when the pullback's coming, guys? Yes, currency Kev. It foretells. Let's get it, guys. He said you just got I told you I got you. Anomaly caught it. I know you caught it because you've done a lot of homework. So you go back test it. You'll see. Market starts moving really, really heavy. They haven't crossed that TSI. Hey guys, pullback's coming soon. How do you know? I just checked the lower time frame. They just crossed on the TSI. Y'all ready, guys? Here it goes. Tiffany says, so when it pulls back on both time frames and at the same time, when it crosses the TSI and RSI, it's pretty much, Tiffany, it's a ripple effect. 15-minute causes the 1 hour. 1 hour causes the 4 hour. Oh yeah, Jennifer, I'm about to, we just got started. Did y'all know that I can literally do a whole course on TDI and it will take probably about 55 videos? Like it will, like TDI is the best thing ever invented. It's just the way you use it. Because like myself, I only trade when I'm trading for myself. I only trade with one EMA and nothing but the TDI. So let's talk about this real quick. And this is only exclusive for you guys right now. Anomaly, you're getting it, bro. So let's get it, guys. Now, obviously, I can't give you guys 100% of absolutely everything, but this is going to be great for you guys. The next line that we're going to talk about is the liquid. Oh, how do you spell liquid, guys? All right, so guys, this is the liquid 50. Let me know when you guys got this written down. The liquid 50 is just like the stationary 50. Let me actually put both of them up here. This is the middle grounds. The liquid 50, here it goes, guys. Here it goes. When combined with the RSI, shows true entry. So the TSI and RSI crossing shows true direction, but true direction does not give us an entry. It just gives us true direction, letting us know that Darius, Darius, I'm about to stop teaching right now. Let's go learn something else, guys. Patrick, I think I'm doing it right now. If the TSI and RSI crossing shows true direction, doesn't mean we get in yet, because we could be wrong. They can go up for another push if they want. But when you have the RSI that does not lie, that green line crossing the liquid, it gives us true entry. So let's back up real quick. TSI and RSI cross, what does it show? You know, this portion right here is only like 2% of TDI I'm about to teach you guys. Tyree, you're wrong. It shows true direction. True direction does not mean you're playing. You just know that the next time frame should be moving in sync here soon. And when it moves in sync, eventually it's going to pass through that liquid 50, creating the true what, guys? You guys know it as true shift, true entry. Now let's go to the next one. Yep, true. True, Tyree. The next one we're going to talk about is stationary 50. Write this in your notes. This is the slowest I'm going to ever teach in history. Y'all better enjoy this right now. All right? Y'all better enjoy this because y'all know I talk fast. The stationary 50. Oh, God, Marcellus. Here it goes. The stationary 50 equals the aqua. For my new people, they don't know what's going on right now. Just know it's some heat. The aqua is what? What do we always say? The magnet, the equilibrium. They always pull back. No, Jennifer, that's a totally different thing. DeLoreans are in the TDI. I don't really use the TDI to see DeLoreans. DeLoreans, you just see the candles. You're fine. But how do I know the correct DeLoreans to play? You're going to notice by the end of this whole session on TDI how you guys are going to enhance on playing your DeLoreans for next week. And that's the reason why I want you to really catch this, really get this, because we're going to put it with your DeLoreans. So guys, the stationary 50 is equal to the aqua. So therefore, when they pull back to the stationary 50, it's just like them pulling back to the aqua. And if you actually zoom out on TDI, you'll see that they always cross through the stationary over and over and over. The liquid moves with the TDI, the stationary stays the same. Yeah, Tyree, that's why I'm going slow. I'm like, they need to get this. TDI is the GOAT. It is literally the GOAT. All right, so we got this real quick. All right, so we have the stationary. All right, we got that, right? All right. The next thing we're going to go over is, I know Kev got it. Let me get this ready real quick. I'm going to use a red lines to show it. And this is only for you guys. Nobody else is getting this training, guys. This is for you guys. Oh, Tyree, I'm about to put it all together here soon. This whole session might just be on TDI because you know what? You guys are doing absolutely amazing. And I need you guys to really get this. Tyree, VBC is how I use my partials. All right, so guys, these red lines, write this into your notes. This is big. These are the extremes. Extremely overbought, extremely oversold. Extremely overbought, is extremely oversold. Teresa, you don't add 70 and 80. It's already on there. 70. Hold on, guys. Hold on, guys. Did I get kicked out? Hold on for a second. All right, guys. Sorry about that. The cutest thing just happened. All right. My little baby. Where's she at? My little Lilo just called me. My little Lilo called me. Guys, can you mute yourself real quick? We're gonna go back in. Yeah, Lilo. She's like, "Hey, daddy." Oh God, it was the cutest thing ever. All right, so let me get back to this real quick. Sorry, guys. Yes, that's who I do it for. That's my heart. That's my baby. All right, give me some ones in the chats if you guys can hear me. Patrick, can you go ahead and mute everybody? Tyree, can you mute yourself? Darian, can you mute yourself? All right, let me get everything back up. Yeah, she was calling too. She's 4. All right, got everything back up. All right, let's get this back. She probably did. All right, let's move that out the way. Y'all see my white screen, right? Everybody, Darian, if you could mute yourself, please. I don't have the power to mute. Thank you so much. Oh, no, Darian, you're back. Thanks a lot. Oh, Darren's back again. Edward, can you mute yourself too? Come on, guys, please. Like, pretty please. Pretty please. All right. All right, guys, I'm just going to mute everything over here so I can just talk. And if it's too loud for you guys, just comment in the chats. All right, almost done with this. Come on, Darren. All right, so here it goes, guys. Extremes, this is extreme high. We're gonna just, for you guys, to help you out as much as possible, I'm just gonna say 70 to 100. Not often does it go all the way to 100, but just for the sake of learning, we're gonna just do it like this, all right? All right, so guys, let's kill this. These are your extremes. Now, when they hit these extremes, whew, here it goes, Edward. It means absolutely nothing if you don't see a shark fin. Now, what exactly is a shark fin? Oh, wait, guys. I went out of order. All right, so keep this. Keep this in mind. And I'm going to add something real quick because I forgot about the VBs. All right, so guys, look over here to the left side. These are your VB lines, your volatility bands. These are not Bollinger Bands. These are volatility bands. All right, different coding, different numbers, different all that stuff. The volatility bands, for that person that wants to understand how to understand consolidation. Who in here asked that question earlier? They wanted to go more on consolidation. Well, when the VB lines squeeze, see the yellow line, guys? It's always centered in the middle. When the VB lines squeeze, this is consolidation. When they shoot open, which is around the times that we trade, this is where the vectors, the 50-50s, the BTSs, and all that stuff happen. Volatility bands is like the water. You have the TSI, which is the blood. You have the RSI, which is showing true price. When price, I probably got that backwards. Oh, well, let me get it right. Oh, no, I did have it right on the other side because RSI is on the outside there. So boom, boom. All right. When the RSI leaves the volatility bands, it creates a shark fin. This is what you're looking for exit. This is also what you're looking for when your vector is done or beginning. Because when they leave the volatility bands, they always come back in no matter what. This is showing a sudden breakout, that false move. So guys, we have the liquid, we have the TSI, we have the RSI, we have the volatility bands. All of this is happening on this chart. Now say this with me, guys. We got the volatility bands. Okay, so here goes. When the market is majority on the top portion of the TDI, this is an uptrend. When the market is majority in the middle, this is consolidation. When the market is majority on the bottom, this is a downtrend. Tyree, here it goes. Watch this, watch this, watch this, watch this, watch this. No, Tyree. If we know that the stationary 50, the Meg is totally crazier thing. If we know that the stationary 50 is the aqua, which is the equilibrium, notice they always come back to it, which means if they always come back to the aqua, they have to go away from the aqua. Isn't that what you guys are already trading? They come back to the aqua. Remember when you guys went to my course and I told you guys that vectors you can play both ways? Towards the aqua, away. Towards away. You don't get the numbers, Darian. They're already on the chart. Tyson said, do you ever use TDI on a higher time frame to confirm bigger pictures? It's the same thing. Same thing you would trade on a 5 minute. Same thing you trade on 15 minutes, same thing on an hour. It's just obviously going to be bigger. All right, so guys, this, here it goes. Somebody's about to catch it. This, when it shoots past, is your vector. They can shoot a little bit lower if they want to. When they bounce off of the 50, this is your 50-50 bounce. This is your vector. This is your vector. This is your vector. This is your vector. This is your 50-50 bounce. This is your 50-50 bounce. Give me some ones if you caught that. My new guys, sit back and relax. I got you guys. Don't worry. I got a part of this whole session for you guys too. Because we already know the closer we are to the aqua, the more money we're going to make. So let's talk about some more stuff. When price is in this top portion, what is that, guys? What is that? It's an uptrend, right? Bullish momentum. Same thing on the liquid. Here it goes. Here it goes, Tyree. Game over. Here it goes. So if you know that above the stationary is an uptrend and you're above the liquid and it dips and throws a Delorean, what are you doing? Your Deloreans will look just like this. Because the cross of the liquid is the what? The true shift, the true entry. So therefore the pullback,
they're gonna trade for like 3 hours straight, like every single.
The closer you are to the 50, all right, can y'all hear me now? Okay, perfect. So let's talk about this again. The closer we are, so guys, when you get a Delorean and it's around this range, in layman terms, near this 50 area, you literally have the highest probability possible of winning the trade. When you get a Delorean up here, here it goes, watch this. Oh, I got to stand up on this one. This is usually when it pulls back to to the aqua. Because the stationary is the aqua. Let me break it down a little bit more, Tyree, for the people in the back. The stationary is the magnet. And the closer you are, the better your position is going to be. Now, before we get to the charts, well, the yellow is the liquid. We're not talking about the liquid. Because the liquid acts the same way as the stationary, it just moves with the market. Because, and I've noticed this, Patrick, I'm about to take it up real quick. I've noticed some positions that you guys have taken from the Delorean. Great, absolutely beautiful Delorean. And it was just supposed to be a loss that you're supposed to take. But if you would have looked on the TDI, they were like this. Or like this. Which means now they're below the liquid and it can bounce back to the aqua. I'm about to turn your guys' Delorean play up. We're going to take it to the charts in a minute. I'm going to try to make it as simple as possible. Yellow, stationary, Deloreans above and near the stationary, you buy it. Deloreans below the liquid and stationary, you sell it. The further you are from the equilibrium, the more dangerous, because they always pull back. Give me some ones if you're following me right now. All right, let's get it, guys. Now, with TDI, you also use it for exit. And I'm quitting after this, guys. I'm not teaching anymore after this. No more TDI after this. Y'all about to. Whoo! I'm done after this. I'm done after this. Y'all gonna have to stay tuned. Oh, Tara, we're gonna go over it. All right, so here it goes. Remember, you just took some Deloreans. Oops, wrong one, wrong side. I know this is ugly, but oh well. All right. So here we have a very, very ugly drawing of a TDI. So when you see these crosses showing true direction, when you see these crosses, you see true entry. Y'all want to see true exit? Oh, here it goes, Matt. Here it goes, Matt. Now, what I love about this exit is the fact I use it the most for my partial profit gain. I want you guys to get this before we start drilling this into our head over and over and over and over and over and over. I want you guys to really understand this. We have our TSI cross showing true direction. We have our liquid cross showing true entry, true shift. But where do we exit? Well, if we know that the shark fin always comes back in before true direction, Sylvie, why can't we use this as the exit? Because there are times where they will not cross the TSI and continue the shark fin. And we don't have to wait another candle that can probably drop heavy and get rid of a lot of our profits through the TSI shifting, showing that the next time frame is going in that direction. So what's the best time to get out? Maybe when the VB collapses. Here we have a shark fin. We're waiting for it to come back in. We're not waiting for it to come back here because that means we're going to lose more money. So therefore, we have true direction, true entry, true exit. You want to know what's so amazing about this sometimes? It's because true direction is an extra indication. Doesn't mean you're trading the trade, Darren. Doesn't mean you're trading the trade, Dave. It's just extra indication. But the biggest thing is that true shift. Very rarely, Nokia, does TSI ever leave the VB. Very rarely. So here we have a shark fin. Here we have blood in the water. Drops. We have true shift. True exit. True direction. True shift. True exit. True direction. True shift. True exit. stationary, trading within and without, consolidation, evenly without, consolidation, vector both ways. Now let's talk about this. Liquid, stationary, VB, RSI, TSI, extremes, shark fin, true direction, oops, hold on guys, true shift, which goes with your signature trade. Now let's start playing this stuff. The biggest thing I want you guys to understand here is here we have a shark fin. Let me get my box out. We have true direction. True direction is nothing without true shift. All the way to VB collapse. And this looks like a Delorean here too. And this looks like it's counter trend. Hits the extremes. Coming back to the 50. This is the 50, guys. So it looks like it's counter trend. Let's see if I'm right. Oh, it's in consolidation. So look at this, guys. It has not shifted on the candles yet, but showed on the charts that it has shifted below. True shift. They didn't give us a Delorean. All the way to your exit, which is this candle here. Now, this goes in line, guys. Let me zoom this out real quick. With your trades and the time frame you show up. Because some of you guys are going to be like, oh, man, I tried to trade a shark fin. I'm like, that's obviously not the time to show up to the market. And it's in consolidation. Look at the VBs. All right? But I want you guys to zoom out. Top portion. So what is this, guys? It's the majority in the top part, right? It's an uptrend. All right. So therefore, it's in an uptrend. Not only is it an uptrend, look, watch this, guys. We're going to start back here. Shark fin. True direction. True shift. This probably is a Delorean. And they didn't give us a VB collapse, but kind of. If it's an uptrend, we're only taking buys. True shift. True direction. True shift. VB collapse. We're gonna take them all. True direction. True shift. This one doesn't VB, but it gets close. True shift. I mean, true direction, true shift. VB. True direction. True shift. This one doesn't beat VB, but it crosses through TSI showing true direction. Here it goes, boom. Shows true direction, but continues. It doesn't matter, you haven't entered yet. Because you're waiting for true shift and your shift candle with it. It's a VB. True direction. True shift. True exit. How many you got? How many of these you think we're gonna win? Nokia says 75. Tyree said most. I want percentages, guys. %, 80%, 98. More than I am now. 80%, 75, 99. I say 100%. Boom. True, not shift, but direction. True shift. Exit. True direction because it crosses that TSI. True shift. All right, y'all want to see something real quick? Watch this. Remember, we're not looking at the candles at all. All right, we're going to start here. We're going to use my replay, and we're going to start here. So therefore, we can't see it. Let's see how many we win. All right. We got, we go, there we go. So now we got shift. We got a shift there. Oh, there we go. We got a Delorean. Okay, cool. We're in profit. Oh, snap. We are winning on this one. Yep. Look like we won this one. Let's go a little faster. Oh, look like we won that one. All right. So we won that one. All the way to VB. We won. That's one win. Somebody keep a tally. All right. Let's see if we're going to win the next one. All right, here it goes. Oh, we got true direction, true shift, and oh, here it goes. Profit. And out. We won that one too. Next. Speed it up a little bit more. Oh, here it goes. We got true direction, true shift, and even in this one in consolidation, we still won on this one too. Even in consolidation, hold up. No, that doesn't mean trade consolidation, you guys. All right, we'll see if this one's a winner. Well, all right, here we go. We got true direction. True direction is nothing without true shift. All right, we're in it. Let's go. We're in profit. Oh my God, just making pips. Oh, it says stay in the game until VB collapse. So I'm gonna stay in the game until VB collapse. And we're in profit again. Good God. All right, let's do it again. Look, even got it before all of that. Before they pull back to the aqua. Remember that? They always pull back to the aqua, guys. I mean, give me some ones in the chats if you're liking this. I mean, maybe this is trash. If this is trash to you, then maybe it's trash. I'm messing with you guys. All right, here it goes. We got true direction. We got true shift. Wow. Straight profit. Wow. Straight profit. Still going. Because I'm waiting for VB. Oh, still going. All right, and I'm out. All right, let's see this one right here. Oh, true direction. But it hasn't gave us what we wanted yet, so therefore we're not in it. And, oh, we're still not in yet. True shift. And this is in consolidation. Oh, it's a time we don't even trade. Look at that consolidation, nasty. But guess what? It says stay. So guess what? We stay. Oh, shoot. Look at that. And profit a freaking again. Wow. All right. Looks like we're still 100%. All right, let's see this one real quick. Oh, instantly profit. Let's go. Wow. Still going. And exit. So yeah, guys, look, it's time to take trading to the next level. And if you receive that, make some noise because we're not done. Now we're done on TDI because I can't like, that's pretty much about 5% of TDI right now. And y'all about to literally try to make me go in on some more with TDI. All right. So guys, appreciate it, Patrick. So guys, this stuff is crazy. Now, it gets even insane. Y'all ready to go for the next section? Scott, you're leaving us? Where did I go wrong, Scott? Scott! No! Okay, yeah, go ahead, take care of that business, man. Yeah, go do that. Go do that. All right, so guys, how are you guys enjoying today's service so far? I mean, let me know. Seriously. Let me know. Okay, perfect. All right, because let's turn it up. All right, so guys, that's TDI. TDI gets even more crazy. The more you know, when you start adding with your signature trades, your Deloreans, it makes it even better. So when you start adding them, it gets amazing. Like, remember I told you guys, the closer you are to the aqua and everything. Look, guys, look, Delorean, guys. All right, so this Delorean right here is below it, in between. So don't take it. But look at this one. Is the green bigger than the red? Blah, 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 all good stuff. But look over here, it's playing above the liquid and above the stationary. Those are the ones you want. Look at this one. It's playing below the liquid, below the stationary. So you play that one. Guys, I'm telling you, I'm about to turn y'all guys into killers. Below the liquid, below the stationary. So you play it. Yes, Patrick, I took Delorean to the next level, bro. above the liquid, above the stationary, you play it. When it's going in and out, you don't. You want
Not to cut anybody off, but wow. I'm going to leave that there.
Above, below. Look at this right here. All right. This one's a little bit above. This right here can mess you up. Because they can literally just unshift and come back up. And we don't want that. You want the best Deloreans, guys. You don't want the consolidation Deloreans. Look at this right here. Below the liquid, below the stationary. Let me know if y'all guys caught that. Above, let's go look for some more of those real quick. All right, you see this one right here? It's look, it's in the middle. Braden, look at that. Yes, you would have won on this, but this is still gambling. So let's take it to the next level real quick. Look at this. Deloreans. You got all different types in here. Below the stationary, below the liquid, but close to it. So guess what? The more guys, I'm trying to make sure you guys make the most money, period. All right. That's my job, is to make sure you guys make the most money, period. I want Delorean Nation students to be making buku amount of pips. Here you go. You got a DeLorean here. Below the stationary, below the liquid, but look how close it is to the extremes. Look how far it is from the aqua. So what do they always do? They always pull back to the magnet. I think Patrick was genius when he called it the magnet the first time, long time ago. I'm like, that's exactly what it is. So guys, let's turn it up. Now, before we get into the part about stacking, remember my newbies, give me some ones in the chats if you are absolutely brand new and you've been confused this whole session. All right, if you've been confused this whole session, don't worry, because I got a section for you guys. Oh yeah, no, I'm taking care of everybody right now. All right, so let's talk about this real quick. I'm going to show you guys how to use the DeLorean. And I want you to sit back and relax. This is for, hey, Louis said you followed most of it. That means I did an okay job. All right, so guys, welcome to DeLorean for my newbies. We're going to go back real quick because I want to make sure my newbies are understanding at least something. They grabbed something today. I don't expect you guys to have 100% of everything today. This is a long session. This is a full training. Giving you guys some of the secrets that I have. Obviously, not all of them. But stuff to enhance your play so that next week, your partials are going to be through the roof. We're going to try and double in size by next week. And I need your guys' help. I mean, let me know in the chats if you are down for the cause. I need you guys making sure everybody is on those calls next week because I'm aiming. I'm not obviously going to be cocky about it or anything because just like Patrick said, the market is always right. But with our confidence in having our exit strategies, our entries, we're going to be good at the end of the day. Guys, we can seriously lose 10 trades and win 3 and we're good. Did y'all see GBP AUD last week? 400 and something plus pip. Come on, guys. So, guys, you're going to be trading with me all next week, and I need everybody and their moms. I need their dog to be there. So, guys, for my newbies, my OBs, I want you to sit back. He said, I'm going to bring Timmy Johnson. Yeah, Timmy Johnson. Hey, guys, I need everybody to pray for Timmy Johnson because in every session, Timmy Johnson just always be doing the wrong thing. Like, Timmy Johnson always. But I just said, never make that noise again. I hope you guys are enjoying this right now, guys. You know what? This is what we're going to do. This is what we're going to do right now. All right. We're going to get started in about 5 minutes. I want everybody on Facebook, whatever. I need y'all guys texting that link out and get as many people as possible in on your teams on right now, because we're about to turn it up, because we're going to go into stacking next. And I hope you guys are ready for stacking. Stacking is, I'm a king of stacking. Stacking is, I'm a monster of stacking. And I'm going to show you guys a strategy on how to do that. And then we're going to go into ADR. I don't even know what time I have left. I don't really care. So you guys can hop off anytime you want. But I love doing what I love doing what we do. And I want to make sure you guys have the highest probability possible. So guys, let's get it, because the stacking, you're going to love it. So yeah, text that link out right now to your teams right now. Tell them, get on right now. And if they ask why, tell them that they found a coronavirus cure. And the only way you can give it out to many people is if they hop on this call. So we're going to get started in about 5 minutes, all right? 5 minutes. We're going to go into Delorean for our newbies. Then we're going to go over to Stacking University. Then we're going to go into ADR divided by 3. See, now all the other people, they didn't get what you just got off TDI. Did y'all really like the TDI session? Malik, I'm done. Yo, yeah, TDI is the best. Tyree, I gotta make sure. Like, I gotta make sure. All right, so let's do it. Hey, great job. All right, so guys, let's get started. Let's do this. All right, so guys, this is the Delorean. This is your extra eyes in the market. This is going to give you better positions than you could ever think of doing by yourself. Why? Because it's literally going pretty much 24/7 of the day. So guys, we first built this for ourselves. Actually, Patrick built it for himself. And I talked him into getting it out for everybody. So everybody, I want you to say, thanks, Patrick. But we built this with one thing in mind, simplicity. So I want you guys to pay attention, because we're going to break this thing down on a whole nother level. So guys, there's 2 things I want you to focus on, guys. Is buy and sell, because this is a multi-time frame scanner. It scans the 15-minute, the 30-minute, the 1 hour, the 4 hour, the daily. It's constantly scanning. It's doing what we can't do, Ronald. It's doing what we can't do, Rose. How many of you guys have seen a pair that you like, and you're like, I'm gonna come back in like 15 minutes, and all of a sudden you looked at 14 other pairs, and then you totally forgot. Now you done missed out on your setup. This thing is extra eyes in the market for you. And if you can understand 2 words, buy and sell, you're going to do absolutely great here, Braden. And then you're going to add that to what I just showed you. How many of you guys are excited testing that next week with the TDI, RSI, the Liquid 50 and Stationary 50 with your DeLoreans next week? How many of you guys are ready to test that for next week? Let me give a recap. If the liquid and the stationary is on the bottom of your DeLorean, you buy. If it's on the top, you sell. You go away from the 50 because it always comes back to it, and coming back to the 50 is counter. Let's get it. So guys, how do we actually use it? It's a 4-step process. I need everybody to write it in the chats right now. BCLS. B, cool little sniper. Bigger cut location space. You're going to ask yourself 4 questions, Tiffany. All right? And if you get a yes for all 4 questions. And you add it to what I just showed you, Malik. Did y'all know Malik is Timmy Johnson's brother, Lil Malik Johnson? I'm messing with you, Malik. You take the trade. So let's get it. All right, so guys, quick note. We're going to focus on the 2 candles to the left, to the left. We're going to focus on everything to the left. So here's your charts. Full chart sheets. This is your cheat sheet. This is the only time in history where people are telling you, Tiffany, cheat. Cheat. Remember in school when you wanted to use a cheat sheet? How many of you guys love the days when you got to use your cheat sheet for your homework for your test? Oh, those are some good times. You wrote all those notes just to have your cheat sheet. Guys, this is your cheat sheet. So Keelan, you're going to look at the top left-hand corner. Notice it says sell signal, call for the 15-minute because there's one for each individual. Sell and buy. And also, is it between a certain time frame? Guys, this enhances every bit of your play. This didn't come overnight. My newbies right now, I want all my newbies right now to chime in right now. You following me? My OBs, I need you guys to stay away from the keyboard. OBs, you do no typing at all. I know you want to answer questions. We're not doing it. This is all for the newbies. We'll get back to you guys on stacking. So guys, these steps 1 through 4 is BCLS. So let's get it. This is for the buy signal. Notice just the verbiage changes a little bit. We even give you some extra notes in the bottom. This is designed for you to become your own pilot in your own cockpit. Well, Tyrone, what exactly does that mean, man? It means that even if I'm sick, no, not the coronavirus. Even if I'm sick, maybe Patrick is relaxing on I was about to say relaxing on an island, but we can't go nowhere. Maybe we're just not here. You're going to be able to play the exact same moves that myself, that Patrick, that Abel, we would definitely check off and say, I traded too. What would that do with your confidence? In the chat, so let me know. What would that do for your confidence, Sharon? What would that do for your confidence, Rose? Imagine being brand new and then you're playing the exact same thing. And I'm like, yeah, I would have took that too. What does that do for you down the road? Notice in the top left-hand corner, there's no time on these ones because this is for your 4-hour and daily. This is for your swing trades. Shout out to those that have been taking some more trades. We actually had a 4-hour Delorean on NZD-JPY. How many of you guys grabbed some profits from it before the market closed on Friday? I wish it would have gave us more, but we're not holding over the weekend. We're not doing that. That's not happening. I'm like, close it out by 3. Good job, Obies. Obies did not write in the chat. I'm proud of you guys. Look at you guys. I thought somebody was about to slip up. I was trying to get somebody to slip up. All right, so guys, this is for your sell signal. Now, newbies, if you're ready, in under 15 minutes, I'm clicking the wrong buttons. Oh, what'd I do? I done messed up. I'm blaming it on Rose. Rose did it. Rose definitely did it. All right, so guys, newbies, y'all ready to hit the charts? What is going on here? Okay. Y'all ready to hit the charts? I think every time I say that, then this whole thing goes crazy. Talking about newbies. Y'all ready? Because in under 15 minutes, you're going to be able to see and identify my most profitable entry that I've ever created in my life. Is your guys' screen red? Because mine's red. Is it red? All right, it's back. All right, so let's do it, guys. So what candles do we focus on, newbies? Little green peas. Do we focus on 2 candles to the right or to the left? Hold on, guys. We focus on 2 candles to the left. Exactly, Beyonce candles. To the left, to the left. All we do is focus on the candles to the left. In my pocket, pips I got. I'm just waiting. So guess what? We're going to ask ourselves BCLS. Try downloading it and then showing the PowerPoint. Okay, I see what you're talking about. Yeah, I'll do that. I'll do that if it does it again. So guys, step 1 is B. Look at the 2 candles to the left of the arrow. Is the red candle bigger than the blue? Newbies, is the red candle bigger than the blue? 5, 4, 3, 2, 1. Look how, wow. Wow. Already looking professional already, Chris. Chris, is that a new suit? Look at you. I just not mess with you. Step 2. Does the red line cut through both candle bodies? 5, 4, 3, 2. Look at you guys. Good. God. Oh my God. Next question. Is the gray, aqua, or blue line closely above the 2 candles, and or just like that red line, is one of them cutting through? Oh, what's up, Johnny? 5, 4, 3. All right, which one is cutting through? Is it the aqua? Is it the dark blue? Is it the gray? Is it the white? I mean, not white. There's no white. Yellow? Is it the red? Which one is cutting through? It's like you guys are just in my brain. You guys are 100% right now. And just, wow. All right. So let's look at the next one. Step 4, space. Did you make sure that the gray, aqua, or blue lines are not closely below your entry point? Your entry is where this arrow would be. Immediately when this closes, you need to, of course, go through your 4 steps that you guys went through literally in seconds. Are there any lines, dark blue, gray, aqua, directly closely below this arrow? You want space for profit, 10 pips or more. Are there any lines closely to it? It's a no. There's lots of room. So it's a yes for room. There's space. There is space for profit. There's 30 pips of it. So guess what we do, Luis? Guess what we do, Michelle? Guess what we do, Edward? Exactly, Michelle. Jolene, you trying to buy that? Oh God, Jolene, don't do this to me. Jolene, Jolene, Joe. I need Jolene to fix her buy. I need her to fix it, or I'm not gonna be able to live. All right, so perfect. BCLS, we take the trade. Jolene, you didn't have to ask, hey, yo, Tyrone, coach, all 4 of them look good. Should I take this trade? Because if you ever ask that, I'm just going to look at you and be like, no, I'm not going to look at you like that. Actually, no, I'll just tell you, nah, don't take it. Well, coach, you said that if you get all 4, take a trade. So why are you asking me? You take the trade. So here we have another one. Jolene is friends with Sharon. Sharon's like, hey girl, we better catch these pips. Pull up with these pips, buy these. Yeah, hey. We got to follow our 4 steps, girl. All right, let's get it. Hey, but what's the first step? You don't know? It's 4 steps. Hey, yo, Sharon, is the blue bigger than the red? Well, it looked like it. Is the red line cutting through both of them? Nah, it's only cutting through that blue one. Yeah, girl, we ain't trading this. It don't look nothing like what we're supposed to be doing. This is called duplication, guys. It must look the exact same. This is how you're going to create great stats. Steph Curry takes the same 3-point shot. That's why he has a percentage on his threes. Mid-range. They have literally stats for everything. Steals, they have stats for everything because you can enhance on it. So guess what? Sharon and Jolene did not take this trade because step 2 did not follow. It did not cut through. It cut through the wick. But we're not here for the wick. We're here for the body. But for the sake of practice, we're going to go through the rest of it. Is the gray, aqua, or blue line closely below the 2 candles? There ain't no lines down here. Newbies, where are the lines at? They're on top, exactly. Step 4, did you make sure the gray, aqua, blue lines are not closely above? Oh my God, this one pinned to it. And it's like 2 pips away. Is that enough profit? No. Bad trade to take, exactly. Do you know what that does, Marcellus? It gives you power over your own trades. Joni? Where you're not having to wait for myself to give you something. You show up in your time frame, you're good to go. All right, so guys, we're going to look at this trade right here. Is it a buy or sell? Good job. Good job. Now 5 seconds. Go through your 4 steps. Would you take this trade or not? Five, 4, 3, 2, 1. Look at you guys. In under 20 minutes, 15 minutes, whatever minutes, I know we're always taking our time, you were able to find our most profitable entry ever. You're going to ask the same question. Is the blue bigger than the red? Is the red line cutting through both? Is the aqua or any of these lines cutting through and or below price? Is there space for profit? Guys, we use these lines. They're like little checkpoints. They hit it. They usually consolidate off of it. Look, hit the aqua, range sideways. Hit the gray, range sideways. Hit the next one. Guys, it's like support and resistance. So you would take this trade. So guys, give me some ones if you understand how to use the Delorean. Boom. Literally, that's it. Chris said, would you take the trade to only the gray? Well, it depends on what you're playing, and that's why you show up to class, because this is a classic BTS. So therefore, your first take profit is the gray. Then you move to the next time frame, which bounce off the gray. This is actually the aqua on the next time frame up, would be the next BTS to the next line. There's levels to this. So newbies, how are you feeling? Are you feeling elite? It's literally that simple. I think Patrick, because Patrick's the one that came up with the 4-step. Because Patrick, remember back in the day when I had to teach everybody the full method for them to learn it, then use it? It took how long, bro? It took forever. And it's just that simple. Do not overthink it. 4 steps, Justin. 4-step Brady. Now, Olbies, you can write in the chat now. Justin said not all the way there. Ask questions, Justin. Where are you confused at? Hey. Feeling like I'm ready for a day or 2 or 3. Am I? Okay, yeah, great job. Blue line, gray line, up top. But wait, blue line, gray line, up top, by. Oh, I see what you're talking about. Yeah. No. Wait, hold on. I'm trying to get that question. Is that a question or are you telling me? Blue line, gray line, up top, by. No, we focus on everything to the left of the candles. Okay. Oh, Justin, great. Look at the 2 candles to the left of the arrow. Is the blue candle bigger than the red, Justin? This is for Justin, guys. Perfect, Justin. Does the red line cut through both candle bodies, Justin? Great job. Is the gray, aqua, or blue line closely below the 2 candles and or one of them cutting through? Good job, Justin. Did you make sure that the gray, aqua, or blue lines are not closely above? Closely above. Is there space for profit? The next one is gray. Next one is blue. Is there space for profit, Justin? And just like that, Justin, you take the trade. No, I got you, Justin. All right, Teresa said, let's remind the newbies when to take these trades. Actually, I'm going to have the newbies remind me. What times do we show up to the market? The best times to trade these. Set it in the beginning. Great job. Great job. There we go. Joe said, I got this, the buy, yet what do we put in for the trade? What numbers do we use for the trade? Well, it goes back to, like, Joe, it goes back to, do you understand pips? Do you understand lot size? Do you understand that stuff? If you're brand new on that part, I want you to head over to my channel and watch the first ever boot camp, because it breaks down leverage, pips, all that different type of stuff. Karina said, to know whether buying or selling, is it the dark blue line and the gray above? We buy. All right, Karina, I want you to just erase everything you just said right there. Do not overthink this. Follow the 4 steps. That's it. Is the blue candle bigger than the red? Is the red line cutting through both? Is the aqua, gray, or dark blue either cutting through and or below the 2 candles? Is there space for profit? That's it. Do not overthink it. Do not overthink it at all. Great job, guys. Your first TP would be here for 15 pips. Hold on. Your first TP would be here, the gray line, for about 15 pips. Yep, there we go. Joni, there we go. Blue arrow shows a buy, red arrow shows a sell, then confirms the steps. That's it. Like, do not overthink this stuff. That's it. It's literally that simple. Great job. All right, so guys, who's ready to turn it up a little bit more? How long have we been going already? Michelle said, when's the best time to execute this strategy? Everybody in the chats, drop the times. Oh, Teresa already answered it. It's on your cheat sheets, top left-hand corner. 2 a.m. to 10 a.m. Eastern Standard Time. Got you, Karina. With the arrow, yeah, the arrow's like right there. Perfect. All right, so who's ready to turn it up, guys? Y'all thought we was done, huh? Y'all thought we was done. Hey, Karina said I rock, so I feel good. All right, that made my day. All right, who's ready to turn it up, guys? I don't think they're ready, Patrick. You know, I'm about to hop off right now because I don't think you guys are ready. If you guys are ready right now, seriously, this is what I need you guys to do. All right. I gave y'all a lot of value, right? Patrick gave y'all a lot of value, right? What I want you to do is screenshot or video anything going down right now. And I want you guys to tag me and Patrick right now. And I want to see my Instagram go crazy. And I'm going to share every last one of y'all messages so people can see what we doing here. Oh no, Karina, you have to multitask. I'm gonna give you some time because I actually got to take a restroom break for a second because we're about to go in on this part. So y'all guys can take a quick 5-minute break because stacking is about to take it to the next level. I hope you guys are ready. Hold on for a second. All right, guys. Give me some ones in the chats if you guys can hear me loud and clear. I'm seeing all the messages come in. That's what I'm talking about. That's what I'm talking about, guys. Start breaking them in right now, because we're about to go into Stacking University. Yeah, tag me on a story or whatever you want to do. Tag me and Patrick on those ones. And let's make some noise, guys. Let's make some noise. We're going to get started in about 1 minute. All right, here it goes, guys. You guys are not tired, right? If y'all tired, we can stop. If y'all tired, let me know. Let's get it. Next week we got to go seriously off next week. I'm already looking at some stuff for some shadows for next week. GCAT is still in play, guys, for shadow. Leave that one. Just leave it. I knew that was going to take probably about a week to even happen anyways. GCAT is still on the menu. So keep that. What up, Nicole? All right, here it goes, guys. Let's get into okay, perfect. Oh, I went to the wrong thing. All right, so guys, let's get into Stacking University. All right, so guys, why do I call it Stacking University? I want you guys to really understand stacking, all right? Stacking is the ability to be able to split up a solid position strategically, not just clicking a couple times and everything. And yeah, where stacking came from for me is before I realized what a partial profit is off of your phone. I'm gonna show you guys how to partial profit off your phone. Before I knew what a partial profit was, this was my way to partial profit. So if you are playing 2% of your account of $1,000, what would that be? If you're risking 2% of your account, what would that be? It would be 20. So you're risking 20 to get 40. You're risking 20 to get 60. 1 to 3 right there. So if you're risking 20, just like Patrick showed you guys before on the calculator, you know your lot size. If you knew that your lot size, we're going to use a 0.1. Just say it for a 0.1. We're just going to say that. We know a 0.1 for 20 pips on EU is 20 bucks. A 20 pip stop loss on EU on 15-minute is it's actually a little bit more than normal. But let's just say we're risking 20 pips on EU. So we're playing a 0.1. So how this works is to be able to split this up in positions instead of just using a 0.1 by itself, wherever the position you entered. Because maybe, Darren, there might be it pulled back a little bit. You could have got a better position up there. So let's talk about this. But what you guys really need to understand, for my newbies, I want you to sit back, have your ears open. You're not going to understand everything here because you need a signature trade. You need a signature entry. You need a signature exit. Something solid. And you must have a solid stop loss. So guys, the dangers. Stacking can be dangerous when over leveraging and not knowing exactly what you are showing up to see. If you're there just to enter a trade and you want to stack, it is dangerous. Greed can kill you with this. Not obviously real, but it can really hurt your heart a lot. So don't do it. So guys, steps of stacking. After you have chosen a pair that follows your steps to trade, step one, how much am I playing totally? How much am I risking? So for the sake of training, we're going to just use something very simple, easy. One lot, one standard. We know where our entries are. In the chats, what are our 2 entries? Everybody, let's go. There's only 2 entries you learn in all of your history with me. Deloreans and shifts. That's it. There's no, oh man, let me enter at a 7.73 point area. No, there's Deloreans and shifts. And obviously, if I give you guys a trade and I say get in, that's about it. Step 2 is you wait for that entry. Everything stays the same here because you got to find out how much you're playing. So therefore, if you have a direct shift, where's your stop, guys, on a shift? Where's your stop at on shifts? Spread times 2 above the high or low of the day. Where's your stop on Deloreans? Spread times 2 above or below the Delorean. Or you can use 10 pips plus the spread. Those are your stops, your only stops. I mean, if you want to do break even after 25 to 35 pips or depending on the time frame, yeah, that you can add that as well too. But those are your stops. You must know these. Because by knowing your stop, you're going to know the percentage you're going to risk. That's why your stop is so important. The only time we don't use stops is if I tell you if we're not using a stop. And I will tell you. I'll be like, no, we're not using a stop on this one. We're going to be in and out of this one really, really quick. Manuel said, if the D-low is above or below, and the D-low is above or below the actual arrow of the Delorean candle. No. It's above the Delorean candles. The 2 candles, Manuel, create the Delorean. Your entry, the arrow is not a Delorean. That's your entry. It's telling you to enter after those 2 candles. The 2 candles that closed, that went through all 4 steps, that's the Delorean candles. Your entry is where that arrow is. Give me some ones if you understood that. Okay, perfect. So guys, your job is to wait for this entry. Because once you have waited for the entry, you know exactly where to enter, Michelle, and you know exactly where to put your stop loss. If you know what your stop loss is at, you know how much you're risking. So therefore, it can fluctuate from that lot, or maybe if you were playing a 0.5, it can fluctuate to you only playing 0.4 or playing 0.3, depending on how big those Delorean candles are and how much you're risking. So find out how much you're playing. One lot, I'll most likely make my first position 0.25. we are now splitting what we are originally risking. Well, let me say this really, really quick for the people in the back. Like, let me know, give me some ones if you're following me right now. If you're already risking 2%, Teresa, you have a direct lot size that you can play. That's the max you can play. If you're playing a 0.01, then obviously you can't split that. So you're going to only play a 0.01. But if you're playing a 0.02, what can you split, guys? You can split it into 2.01s. If you're playing a 0.03, you can split into 3.01s or 0.02 and 0.01. If you have a 0.04, you can split it in multiple ways. You guys catch where I'm going? The reason why I love stacking so much is because a Delorean happens, you enter, it gives you a Patrick push, your advanced entry, it pulls back, and you're thinking of one thing, Michelle. Man, I wish I would have knew it was going to pull back. I could have got in there. What's amazing about this, I'm getting ahead of myself. Let me get back real quick. All right, so step 3, the shift entry is and will be the last position you pull because the shift is the first entry. This is a big nugget. Write this down right now. It goes in order for entries. The shift always happens before the Delorean. Always, 100%. You will always have a shift before the Delorean. The closer you are to the shift, we know this, the more we're going to make. The closer we are to the aqua, the more we're going to make. We know this. So guys, the shift entry will be the last position you always pull. If out of that standard I was playing, remember I told you my first position, 5, 4, 3, 2, 1, the candle closed. I'm not going to play a standard right here. I'm only going to play 25% of my original position. That is only worth a risk of 2%. Why do I do that, Braden? Because one, my risk is very low. Let's just say, Braden, it just takes off without me. Profit's profit at the end of the day. I'm safe. I now have 0.75 left over to play. Step 4, the 13 is used a lot. Here it goes. Oh, here it goes. Y'all ready? Y'all ready? Here it goes. The 13 EMA is used a lot. You obviously know the direction. So it's a weight gain from here. Hold on. Yeah, there we go. Let me move this out the way. So it's a waiting game from here. Because, JH, if you know that it's a downtrend, Brayden, what options are you taking? Michelle, Pam, Marcellus, what options are you taking? Only. Sales only. If you got a shift down, sales only. You got Delorean's down, sales only. So let's break this down. You wait for the pullback, and this pullback goal is to get to the 13 EMA. Here it goes. When you see it touch, or you can actually set pendings where 13 is. These are great areas to add the rest of your play. It's not only going to give you more positions, but this position is usually higher or lower, in a better position than your first shift entry, even closer to the same stop loss. So let's just say for some reason, Pam, you played your 25% at the low end. It pulls all the way back. You hit the rest of that. So the same 2% you was risking, and then it went to hit your stop. You're actually losing less than you would have done if you would have played the whole lot as soon as it closed. Give me some ones if you're catching me real quick, because I'm about to level up. I'm about to go Super Saiyan in a minute. Your biggest position is the closest to your stop loss. And we're going to see it in a minute. Step 6, when price touches the 13, you enter and you find an amount that you want to stack with. If I'm playing a standard, there's so many things I can do. 0.25 on my first position, maybe 0.1 on my second one, maybe a 0.70 on the next one. I mean, a 0.60 on the next one. Whatever. The closer I am to that stop, I'm good. Short stop, big gains. It even increases your percentage, your risk to reward. For this example, we will use 0.15s for our training. So here we have a classic A range vector for my new guys. Sit back, relax, it's okay. We have the shift, which is the cross of the 13 and 5. Your first entry. For my new guys, you don't know that yet. I'm going to show you exactly where to get that. Your first entry is here. It drops. It pulls back like expected. The green candle touches. So I'm going to add a 0.15. Your account has to be able to handle stacking, though. Yes. Yeah, you don't want to stack with 100 and 200. Just play regular amount that you're supposed to. I usually start stacking around 500. Yeah, around 500 is usually when I start stacking. Stacking gets the most fun around like 5K to 10K. Oh, it gets fun. So guys, this green candle here touches. So therefore I hit it, bow. Then the red candle touches. Then I hit another one, bow. It drops. Next red candle touches it again. Then I hit another one, bow. All equaling the amount that I was going to be risking in the first place. Drops. Comes back to the 13 again. Hit it again, bow. Give me some ones if you're following me right now. Because somebody's about to get an aha moment on this next part. Do you know why we go off of that 13? Because the 13, which is the red line, on the 5-minute is the aqua. And they always pull back to the aqua. Yes, your stop never changes. Here we have a vector here, M, shift. We have our entry. They pull back, bow, hit it again. They pull back, bow. Got a better entry than my first one. Pull back, bow. Let's go hit it again. Pull back, hit it again. All adding up. Maybe I only got 3 of these positions. Now we have a Delorean. Bow. Now our stop moves from spread times 2 of the high of the day now to the Delorean candle, spread times 2. Pulls back, doesn't hit, hits, and you're good to go. Obviously, this is way too late in the day. But they always pull back to these EMAs, these lines. Because if you don't know, they're all actually the 50 EMA. What does that mean? This red line is the 50 on the lower time on the 5-minute. This white line is the 50 on the 1 hour. This dark blue line is the 50 on the 4-hour. That's why we use these EMAs. EMA stands for exponential moving average. They are all the 50 on each individual time frame. That's why we love them so much. So here we have W, shift, pulls back, hit it, pulls back, hit it, profit, pulls back, hit it, profit. All right. So now that we have two positions in, we let them ride. Here's Kaylin. They haven't even got to the meat of it yet. You thought that was, no, it's not the meat yet. Your next 15 goes where the next candle on the way to your TP hits. On the next candle on the way to your TP when they actually hit that 13 again. And you continue to keep hitting that 13 until you equal your original amount that you're risking. Now here's the fun part, taking profit. Your original position is the only one that stays till TP. I call it my cleanup guy. Why? Because the ones on the inside are my profits. The ones on the inside are the ones that I pocket. The ones on the inside is what you guys are calling partial profits. Set a goal for the 1.5. Whether it's 10 pips or 20 pips. Jeremy, you have the first position rolling, but then you had two extra positions at 0.15. They both went 20 pips, pocket, while you still have that 25 still rolling. When each position hits that target goal, you manually pull out and protect your assets. Or you can wait for the ADR divided by 3, pull out, which you're going to learn that later. Now, let's talk about this. Your first entry is here, shift entry. Second entry is here. Watch this, Jeremy. Third entry is here. Fourth entry is here. The market drops 20 pips, you pocket it 20 pips. While this original entry is still rolling. It drops even more. You can go to your VBC and you're out. It keeps you safe. But let's talk about if it goes the wrong way. You still have your same stop. Let's just say you have this Delorean here, right? And you entered. Your stop is spread times 2 above the Delorean. They pulled all the way back here. So you have one entry here. They pulled all the way back here. You have your biggest entry here, the closest to your stop. If they hit my stop, I only lose this portion for my big entry and that portion for my smaller entry. But back in the day, I would have had my big entry here and I would have lost all of that for my big entry. Give me some ones if you've seen the difference here. I've been doing this for years. It has helped so much. So your first entry is here. They pull back. Second entry, it starts going in profit. Great job. But at this point, look, check this out. At this point, it's at. Actually, let me switch up something real quick. All right. It's not so much of your first entry. It's usually the highest position. The highest position stays in. Erase what I told you guys about the I messed up too about your first entry, because a lot of times your second, third entry is going to be higher. It's always the highest position stays. Give me some ones if you caught that. It's the highest position stays. I messed up on that. I apologize on that. The highest position stays. So that means when this one hits 20, you're out. My bad, hold up. All right, so here we have shift, boom. John Jacobs has entered the building. He's put a 0.2 on right here out of his original 0.5 that he could play. It pulls back. He puts 0.3 up here. Pam said, is this so you can see how far it goes in and out of profit? No. This is just something that works. And you're already going to play that amount anyways. Why not? It's protection, yeah. Why not see how high you can get? Because not all the time they're going to give you a Patrick push. They're not going to give you this pullback to the 13. This is so that if they don't, you're still going to profit. If they do, you're still going to profit. So John Jacobs puts 20% here, or a 0.2 here, and then puts a 0.3 up here. His stop is the spread times 2 above the high. Which one is the closest? Well, the 0.3 is the closest to it. So from here to here, he's only risking this much on the 0.3. When in reality, if he would have played the 0.5 down here, he would have risked a lot, way more. So then it drops. The 0.3 is in profit. 0.2 is not in profit yet. But and overall, by this point, he's already in profit on everything because it cancels out. It starts dropping. He gets to about 20 pips. He pulls out this position. Now he has a cushion. It keeps dropping some more. And he pulls out on his his VBC. And he's good to go. But what's amazing about this, a lot of times, John Jacobs is going to get straight profit on one, pull out, it pulls back. He still has 0.2 he can still play. So he hits 0.2 again up here. Somebody just caught that. Let me say that again for the people in the back. John Jacobs entered a 0.2 here. Pulled back, gave him a 0.3 up here. It drops heavy all the way past, gives him 20 pips. He pulls out of his lowest one. Pulls all the way back with this green candle. He still has a floating amount that he already has from 0.3, but he can still play 0.5. So therefore, he has 0.2 left over. So he hits it again up here. Drops 20 plus pips. He pulls out again. They pull back again. He hits it again. Here, guys, this is how I've been literally grabbing 400 pips in a range of like only 100. Like literally, I literally it'll go down 20-some pips, pull back, and hit it again with the same amount while I still have the original one up here. And I love doing this off the 4 hour because the 4 hour gives a lot. And then guess what? In this range of this many candles, he's done to hit it and grab 20 every time in the same distance. And then it was ready to go after that. And guess what? The cleanup guy up here, the cleanup crew, is pocketing all that. But let's just say on this third one, it goes and stops him out. He doesn't care because he done already pocketed some money already, which means he has a cushion. And if he has a cushion, he's good to go. We have the M, we have the shift, we have the pullback, we have the entry. It drops, enters again here, drops. Look, watch this. Ooh, takes profit, partial profits. Pulls back. Ooh, takes partial profits again. Pulls back. Ooh, takes partial profits again. Ooh, pulls back, takes partial profits again. Doesn't pull all the way back, still in the original play. Pulls back. Ooh, takes partial profits again. Great job, Evan. It's really fun when you do it. Yes, Ronald. It's like stacking your entries. Yep. So guys, when your original position is close to or hits your TP, you are done. I'm so sick and tired of people getting so close to the TP about 5 pips away and don't pull out. If I'm watching, Ronald, and I'm 6, 7 pips away from my TP, I pull. I'm watching. If I'm not, then I let it go. That pair is no more till tomorrow or the next day. Do not overtrade. Your own guys, all I'm doing, Ronald, is playing the same direction I was already going to be playing with one position. I'm just catching all the pullbacks. So guys, here we have our shift entry with the 0.25. Pulls back, 0.15. Here's the dangers of stacking. Counter trend trading is dangerous, which means BTSs are very dangerous with stacking. When you are left behind, you will pay for it and you will suffer. So trade with the trend. And no one, of course, pull out. The further you are from the 50, the further you are from the stationary 50, the more dangerous it will be because they will pull back, which is the reason why your lowest positions always take profit quick. Shout out to the partial profit crew. You have your entry here, pullbacks. The further you are away, they pull back to the aqua. The further you are away, see this right here? They pull back, the more dangerous it is. You have your M's, you have your shifts. The further you are away, they always eventually pull back. Now, you can also set pendings on those 13s if you're not there. What does that mean? You took your shift entry, guesstimate where the 13 might be, and leave it. You still got your stop loss in the same exact place. Let me show you guys. Let's find a Delorean. So here we have a Delorean here. Is the red bigger than the green? Yes, it is. Is the aqua, is the red line cutting through both? Yes. Is the aqua cutting through both and or above price? Is there space for profit? Okay, cool. We went through all this stuff. First entries here. Then you're going to have your stop loss, spread times 2 above here. And you're going to guesstimate where the 13 will be. Put your pending here, and you're good to go. Guess what? You got another D-low here. Your stop moves down to the next D-low, spread times 2. Not only do you have another entry, guesstimate. Patrick, why am I doing this, bro? I'm just giving him everything. Guesstimate where the pullback will be. Guys, the old you would have only made 15 pips. The new you would have made 15 pips off that position. You would have made 17 pips off that position. 10 pips off that position. 15 pips off of that position in the same amount of distance that you was already going. Y'all guys seeing the importance of this? Guesstimate. All right, so here we go. Here we got an LL. This is an LL Delorean here. You can still put another pending up here where the red line will be. It tags that, boom, all the way till completion. Oh, let's go find another Delorean. Shift. Nope. Nope. All right, here we go. We got DeLoreans. Ooh, watch this, guys. This is beautiful. This is beautiful. This is beautiful. Watch this. Watch this. Watch this. Here we have a DeLorean here. Everything follows. We're in consolidation, obviously. Entries here. Guesstimate would be here. Stop would be spread times 2 above. This is NZD. This is obviously not even a pair. NZD AUD. Actually, yo, can somebody look up AUD NZD spread for me real quick? I think AUD NZD is, I think it's like 5 pips, isn't it? Exactly, Star Vega. 15 pips to 58. Somebody really quick look up AUD NZD, not that one. I messed up on it. All right, so the spread is 2.6. So therefore, we got 2.6, which is 4 point. What is it? 4. What is it? Oh, 5. Oh, we good. Oh, shoot. That means our stop wouldn't have been hit. But I wanted our stop to get hit. Okay, it defeats the purpose of this, but let's just say our stop got hit, all right? Your stop wouldn't have got hit, but let's just say your stop got hit. All right, so you have this entry, and you have this entry. Watch this, guys. Watch this. Let's just say we were playing a standard, and your first position was a 0.2 down here, and in your next position was a 0.8 up here. So if you have a 0.8, you would have only lost about $100 off of this one right here. All right, so 100. And then off this one right here, try to go 20. We're trying to even it out. So 20 pips at that one would be $140. All right. Oh, wait. Yeah, about $140. All right. So you just lost $140 off this. Say no more. It's okay. It's okay. Because 3 candle rule. Actually, you would have lost less than that because of 3 candle rule. Boom. But let's just say it was up here. This is what I'm trying to get you guys to really understand about trading is it's all part of the game. Do not sit there and sulk and all that stuff like that because you're going to be fine because that freaking, let me see how many pips you lost here. Somebody write in the chat, $140 so I can remember all this. 20 pips. And then the position up here is about, I'm going to just say 15 pips to make it easy. So 20, so 35 pips. Somebody write 35 pips real quick. Somebody write 35 pips. All right, so perfect. The next Delorean we see, which is here. Watch this. We have our spread times 2, which is up here. All right. We have our guesstimate, where our pendings are. So let's just say even if it misses this one, it still hits this one right here. All right. We're going to take it all the way to our exit. So you got your first position, which would be a 0.2, second position, 0.8. All right. First position drops over 20. You pocketed that. 40 pips, $40 is now in your pockets. Second position drops all the way to here for 23 pips right here. It doesn't take a rocket scientist to see that you done made all your money back and then some. What you want to do is you want to keep your consistency. What a lot of people do, Ronald, is they'll play a position, lose on it, and then throw it in the trash. Nah. The 3 candle rule is there in effect because it's telling you it's in consolidation. I want to find one that we can lose on so I can show you guys. You re-enter. And then you take it to your exits. And you do the same thing. Here's a shift. You got a shift candle here. And you made more money. Pulls back. And you made more money. And so on. Here's a Delorean here. Yeah, the market. Oh, true market. So yeah, let's just say it did really it really hit. Then the next day, we have a Delorean. Is the red candle bigger than the green? Is the red line cutting through both? Is the aqua above and or cutting through? Is there space for profit? Yes, there is. Put our pending. Next candle close. Put our pending where you think it's going to be. Next candle close. Put your pending where you think it would be, or manually enter. So now you got 3 positions on here. You got one in manual enter and your pendings. Whatever one's the lowest ones, you pocket on. And the other one rides. So guys, if you enjoyed today's service, make some noise, guys. We just went in for like 3 hours and a half. If you guys are ready for next week, make some noise. If you tag me on Instagram, make some noise. I'm about to go call my little princess. What I want you guys to do is to go do some homework on it. And really take this stuff serious. So guys, hope you guys enjoyed. That's my time. And let's get it, guys. Next week is about to be insane. We got new times. We got more live trade sessions. Let's get it, guys. Thank you, Teresa. Thank you, Canada crew. Thank you, D-Lo Nation. And I hope you guys have a great day. Let's get it. Yes, my new times are up on IM right now.